Reciprocal check one. Mr. Chathuranga Sandaruwan, Senior Lecturer in Sri Jayewardenepura, Department of Faculty Management Studies and Laws. This subject was a leading from postgraduate school management in senior countries share as workplaces in the same level. With a strong academic background and famous teaching skills, he has done countless things towards living the achievement of their success. Also, having lived despite fail in the American series. I frequently explore the work of our lecturer for today's session, Mr. Chathuranga Sandaruwan.
Uh, Good evening, everyone. I hope that I am audible enough. Can you confirm me whether I am audible enough? Yes, great. So today we are going to do the, I would say, the final seminar for advanced level examination, which will be held in November. So I have selected a few questions to discuss the important matters which will be useful in the upcoming examination. But if you have any question in the syllabus, you may ask those questions during the session. So we are planning to do 2 sessions. Today is the first session, and tomorrow will be the second session. I thought of selecting the company accounting question as the first part because you know that in the second paper that is a compulsory question, and that is the very first question which carries 40 marks. Okay, so I hope that you have got the handout and you may have a print of that. If you don't have, don't worry. I'll share my screen during the session, so you can listen to the explanation and then understand it and leisurely. If you don't have a handout in print version, so you can get a print of it later. Okay, so I suggest you to ask questions and contribute to this session to have a productive, effective session. Okay, so that's your session. So if you have anything, let me know. Right, I'll try my level best to explain all these things. Right, great. So let's get into the first question in the handout. Okay, meanwhile, can you have the format for the company accounting question? You know, that format doesn't different question to question. Therefore, can you have the format? So I'll try to get tutorial into the Zoom. Wait for a while, and till I get it, please have the format of the company accounting question. So let me start, then you can work on it. The company's name is IHPLC. So you need to write the company name and the period, the reporting period, and the statement's name. Right, great. Now I think you can see my board as well as the tutorial. Right, great. Okay. So the format, write the company name, the reporting period, and the statement's name. Okay. And also better if you could write the reporting currency as well as the level of rounding. Okay, at least at the first instance. Okay. So it is rupees thousands. Because actually these are requirements as per LKS 1. You know that reporting currency, level of rounding, those are needed as per LKS 1 accounting standard, right? So better at least at the first instance, if you can write that, better. Top of the list, we have the revenue, minus cost of sales, cost of goods sold. Then we get gross profit plus other income minus expenses, distribution cost, admin expenses, other expenses, finance cost. Then we get profit before tax, right? And from that deduct income tax expense, then we get profit for the period. Profit for the period. Then we have other comprehensive income, keep some space. And then lastly, total comprehensive income. And here I included one adjustment for the revenue. You know, as per HLFRS 15, the revenue may consist sale of goods and rendering of services, meaning sales income and service income, right? Therefore, I assign the first note for the revenue. Note number 1, revenue. Note number 2, other income. Note number 3, profit before tax. Note number 4, tax expense. Yes. And then let's have the statement of changes in equity. Statement of changes in equity for the year ended 31st March 2025. Stated capital ordinary shares, revaluation reserve, retained earnings. Okay, have this format. Literally, you can have it because you know the format. By now, you should know how to write the format of a company accounting question. And then the statement of financial position. So I have to use another page. So I'll keep this page for a while so you can have the format. Okay. Right. So then we can get into the statement of financial position. Again, write the company's name, IHPLC. Statement of financial position as at 31st March 25. Notes, two value columns. Non-current asset, under that property, plant and equipment, right of use asset, then current asset, under that inventory, trade receivables, other receivables, and cash equivalents. Then we get total asset. And then equity, under that stated capital ordinary shares, revaluation reserve, retained earnings. Then non-current liabilities, keep 2 rows, and then current liabilities, trade payables, other payables, and keep more space for current liabilities. Then you get equity and total liabilities. Equity and total liabilities. There is a question. The recent marking scheme notes have been changed. Students, there is no hard and fast rule to write the notes. Depending on the question, you can write the notes, right? So I don't know what you are meaning for from this question. Recent marking scheme notes have been changed. Can you explain it further? And then profit before tax is the note number 1 in the new marking scheme. Now you have a misconception. Remember, if you don't have other income, you don't need to put note for the other income, right? And if you have other income, you may write a note for the other income. Now, the recent marking scheme, you say that recent marking scheme doesn't have the note for the other income, meaning that they are not having the other income in that question, right? Don't by heart, like think it logically, and you can assign note. Now in this case, I assign a note for the revenue as well. See, because now in this question I included one adjustment from the SLFR 15, the revenue. So revenue consists of sale of goods as well as providing services. So in a case like that, you have to have a note for the revenue, right? Don't think like a machine, right? So I have to have your understanding. With the understanding, write the format. Okay. So if you have two types of revenue, better you take a note and then take the total of the revenue, take the total here. Okay. You will understand all these things once I do this question. Yeah, we need to have the workings. Will the recording of this will be posted somewhere? I don't know. From the organizing committee, we will ask it. Yes, workings. Now I kept the screen for a while to write it down. Now we can get into the workings. But before workings, Lamai, we have to have the notes, right? Notes and then workings. That's the correct way of writing it, right? Always try to understand the correct way, Lamai. Then you don't lose any mark. But if you find shortcuts, that might be applicable to last year or this year, but may not be applicable for the next time. Okay, so try to understand the proper way of it. And after this, we can have notes. Note number 1, I'll write it here because then I can reduce the number of screens needed. Otherwise, I have to navigate here and there, right? So notes. Note number 1, revenue. Note number 2, in this case, other income. Actually, I did not read the question, right? Can you see that I did not read the question, but I just look at the question. I mean, I had a glance of it and then have the format. Because Lamai, at the examination, you may not have in required time to read the entire question, but you have to have a glance of it and then write the format. Because for a company accounting, you know, the format doesn't change from question to question. But when it comes to a partnership question, the format may be different, and for other questions as well. But for company, you know, these are published financial statements. So these formats cannot be changed. Okay. So my advice is have the common notes. If you have items, you can include them. If you don't have items, you can leave it. Okay. So note number 2, other income. Note number 3, let me take it here. Profit before tax has been derived or has been calculated after deducting following expenses. Profit before tax has been calculated or has been derived or taken after deducting following expenses. And for these notes, Lamai, I think maximum of 3 rows would be enough. 3 rows, right? And even for this. And then note number 4, in this case, income tax or tax expense. Have it. Note number 1, revenue. Note number 2, other income. Note number 3, profit before tax has been calculated or derived after deducting following expenses. Note number 4, income tax expense. All right. Better if you ask questions. I like it. Is it okay to put bracket near sales to do the adjustments and put final value without putting a note revenue? Now what he or she is asking, now revenue consists of 2 things, right? I told you that I have included the sales income as well as service income. So he or she is asking whether we can put a bracket near the sales, sorry, near the revenue to include both the figures. No. The reason is, if you look at the SLFR 15 revenue standard, it says you have to disclose the sale of goods and rendering of services, providing services income separately. It should be disclosed. If you write that in a bracket means, it is kind of a working. Workings are not disclosed. Workings are not presented in the financial statements, right? Technically, it is incorrect. Technically incorrect. That's why I told you my advice is write the answer in the correct way. Then you don't lose any mark. But if you do shortcuts like that, sometimes you may get the marks, full marks, but sometimes you may not get the full mark, right? So I can't give you an assurance, but if you write the correct way, if you use the correct way, you don't lose marks at any time. Okay, right? Anyway, good question. And then note number 5, property, plant and equipment. So if you look at the asset classes, Lamai, if I just share the tutorial, asset classes, sorry. Here we have property, plant and equipment. And if you look at the composition of it, see, we have lands, we have buildings, we have equipment, we have motor vehicles. 4 asset classes. For each asset class, you need to have 1 column. What happens? Yeah. All right. So lands, buildings, equipment, motor vehicle. We have to have 1 column for land, then 1 column for buildings, 1 column for equipment, and 1 column for motor vehicles. Lands, buildings, equipment, motor vehicles. Cost of valuation, balance as at 1st April 24, additions, disposals, revaluation, and then transfer of depreciation on revaluation, then balance as at 31st March 25. Then accumulated depreciation under that balance as at 1st April 24, depreciation for the year, removals minus transfer of depreciation on revaluation. And then we get balance of accumulated depreciation as at 31st March 25, and lastly carrying amount of asset as at 31st March 25. And then we need to have the right of use asset. Number 6, right of use asset. For that, I'll take a small note like this: cost less accumulated depreciation. Then we get the carrying amount. And note number 7, other receivables. Note number 8, other payables. Then you can have the notes. I have got a lot of questions. One is sales also wants a note. Not the sales lamai, take the revenue on top of the list, right? Revenue should have a note if the service income is also applicable. But if you have only sale of goods, then you don't need a note for that, right? And then can we write short forms like non-current liabilities? Why not, Lamai? Because you have the understanding. You are you are struggling with the time in the examination, right? So if you write non-current liability like NCL and the abbreviation, you have the understanding, you have the knowledge. But to reduce to reduce the time needed, you have written it in the short form. In my view, that is perfectly okay for an examination. But for the publication purpose, if we prepare the statement in proper way, you need to have the full wordings. But for the examination, that is perfectly okay, in my view. Writing the PBT expenses is mandatory or not? How many marks will be allocated for the notes? Yes. Profit before tax has been calculated after deducting following expenses. Usually 2 marks are allocated, but last time it was 1 mark. Usually 2 marks are allocated. That is a disclosure note. Okay. Can we draw the statement of profit or loss and statement of financial position in the same page? Yes, perfectly okay. That's why I told you. You have to comply with the essentials, right? But still, you can do some, strategies to cut the time, right? You can't violate the rules, but by complying to the rules, you can do a lot of strategies, the methods to reduce the time needed. For example, as she say or he is saying, you can have these formats side by side, side by side. Okay. So what is the easiest way that I can score good marks in company accounts? Oh my God. What a difficult question for me. My advice is have the format as early as possible and start working, right? And remember, most of the marks are given for the adjustments, and do the adjustments carefully, taking your time. And rest of the things are, balancing part is not that important, right? On average, if you have done all the adjustments correctly, you will be getting like 80% of the marks. So 40 into 80%, like 30 plus marks will be can be taken if you have done the adjustments, right? So do the adjustments correctly and take your time to do the adjustments. And you know that for the company accounting question altogether we have 36 minutes. 36 minutes. Within 36 minutes you have to complete this question. But practically you may need extra minutes. So how do you get it? From the management accounting questions like marginal costing, investment appraisal, and so on and so forth. So you can reduce time, right? So if you have saving of time from that questions, you can take another 5-10 minutes for the company accounting question, right? Plan like that. This is a game, right? So if you plan, if you execute this game, and if you have the strategies, you can manage your time. And believe me, for me, I have done a lot of examinations, O level, A level, university, chartered, ACCA, university examination, masters. So never I have situations where I haven't enough time. So I have managed my time every time. Okay. So it's a game, Lamai. Take the gamification here. Have the game mindset, gaming mindset. Okay. And also have your own strategies. My strategies may not be applicable to you, but you are a unique person. So you may have your own set of strategies. Then dates on PP table are compulsory to get marks? No, actually. If you write balance, but if the examiners want to cut your marks, they can. Because balance, they don't know whether it is the opening balance or closing balance, right? So at least you have to write opening balance or closing balance. That's not the way to write it. This is the correct way to write it. I don't think that you take much time to write this balance 1st April 24, balance 31st March 25, or else you need to write opening balance and closing balance. Still you need to have additional word, opening and closing, right? Here also you have the date, balance. Okay. Is expense table working? Yes. Expenses table working. I'm going to have it. I'm getting many questions. How much of time has to be allocated for this question? 36 minutes. How do you decide the time, Lamai? Right? You have 3 hours and 10 minutes for the second paper. 3 hours means 3 hours and 10 minutes, no? 3 hours, 180 minutes plus extra 10, altogether 190 minutes, right? You get 200 marks for the second paper. So if you divide 190 minutes by 200 marks, you get 0.95. 190 divided by 200, you get 0.95 per mark. Minutes 0.95 per mark. Okay, simple logic. You have altogether 190 minutes. If you divide that by total marks 200, you get 0.95 minutes per mark. So for this question, you get 40 marks. 40 into 0.95, right? You can spend 36 or 38 minutes. Now here we get 38 because of this extra 10 minutes, otherwise 36 minutes. Got it? So that's why the marks are allocated for the subparts of the question, right? Have you ever thought that the reason for allocating the marks for the subparts, part 1, 10 marks, part 2, 5 marks, like that, to manage your time? Otherwise, they could have given the total marks 200 at last. But they are not doing that. They are giving the marks for the subparts of the questions to manage your time, right? In 3 hours, I am able to do only 4 questions. Disaster. Completely. You manage your time. You have time, right? And you can do 5 questions. Believe me, if you have proper strategies, right? And if you have the best method of time management is Lamai, knowing the theory perfectly. If you know the theory perfectly, that's the best method of time management. You don't have time to have time to think what is the treatment, what is the answer for this, right? You are not like thinking here and there. Precisely you know the answer, then you write straight away. So best method of time management is knowing the knowledge correctly, knowing the theory correctly. Other things are the secondary things, like writing short words, writing format side by side. All these are secondary. The best method of time management is knowing the theory perfectly. Okay. Oh my God, I am getting many questions. Okay, anyway, as these are relevant questions, I'll answer. Still, I am in the format, right? Okay. The next one, is it okay to do the company question as the second question because doing company makes less confidence? That's okay. But my advice is now, if I were you, I would do the company accounting question first, because on one hand I have the confidence because I know company accounting very well. You might think that now I have a lot of knowledge and experience and the qualification, so I have the knowledge. No, no. If I were you, right? So I had the perfect knowledge on accounting, right? Believe me, I did actually all questions. In our periods also, there was an option to select questions, but I did all questions. But I am not telling you to do all the questions. At least you have to do 5 questions, right? So you have to manage your time. So my advice is, because first 2 questions are compulsory. Anyway, you have to do those, right? So build your confidence on the company accounting. Company accounting is standards, right? If you know the standards, you can work on it. And then the second question comes from the management accounting. And if you do, you can, swap those questions, like you do second one first and first one second. That is perfectly okay. But my advice is, do these compulsory questions first. Then 80 marks have been taken, and then you can select 3 out of 4. Okay. If we get a wrong answer for NPV for investment appraisal, do we lose all marks? No. Look at the previous marking scheme. For investment appraisal, the most of the marks are assigned for the estimating future cash flows, right? So if you have an error in one cash flow, you lose only 1 mark for that, but rest of the marks you will get. So my advice is complete the question, even though some adjustments are difficult to you, right? Even though some answers are incorrect, complete it until the last. You will get marks. Remember. Okay. So I hope that I answered that question. Is OBEL okay? Meaning opening balance OBEL. Okay, I'll say okay. Then you can be happy, right? OBEL, opening balance. Right. That's perfectly okay, Lamai, because you have the understanding, you have the knowledge, but to save the time, you write abbreviations. But don't write just O, right? Is it possible to put company format before the exam starts? Hmm. I'll skip that question now. That's up to you to decide, right? You know that for some questions there are no answers. If you want to find answers, you will be in a struggle. Like when did this universe start? When will this universe be ended? No answers, right? Is it possible to put company format before? All right, okay. Answer that question. Is it okay to write admin expenses instead of administrating expense? Yes, Lamai. That's what I am telling you right from the beginning. Right? You can short the words admin expenses, finance cost, fin cost. Right? That's perfectly okay. Can you show me the statement of profit or loss format? Okay, I'll come to that format. So I'll stop reading the question for a while, Lamai, because still we haven't got into the question, right? So after the notes, actually keep some more space, like 3 rows, because there may be disclosure notes, contingent liabilities, so on and so forth. There may be disclosure notes, right? Therefore, keep another 3 rows. Then workings. Under that, we have to have expenses. For categories are distribution cost, admin expenses. See how I am writing this? Other expenses, finance cost. Okay. If you plan your space, Lamai, you can have all these formats in two sides. Within one page, you can have all these formats. Two sides meaning one page. Okay. Right. So I'll show the formats quickly from the beginning. This is the statement of profit or loss and other comprehensive income, revenue, less cost of goods sold, GP, other income, distribution cost, admin expenses, other expenses, finance cost, profit before tax, tax expense, profit for the period, OCI. And then statement of changes in equity or ordinary shares, revaluation reserve, retained earnings. Sorry. And then here is this page. Okay. Then statement of profit, financial position, non-current asset, under that PPE, right of use asset, current asset, inventory, trade receivables, other receivables, cash and cash equivalents, total asset. Then equity, under that stated capital, revaluation reserve, retained earnings, non-current liabilities, current liabilities under that trade payables, other payables, then notes, revenue, other income. Third one, profit before tax has been derived or calculated after deducting following expenses. Then note number 4, income tax. Then PPE, for each asset category or classes, we have to have a column: lands, buildings, equipment, motor vehicle. And then right of use asset, cost less accumulated depreciation. Then you get the carrying amount, other receivables, other payables, and then notes: distribution, admin, other finance. Okay, so let's see the question. We have sales, service revenue. See this, service revenue, unearned service revenue. So I have made an adjustment from the SLFRS 15 as I told you earlier. Cost of sales, property, plant and equipment, other income, trading stock, trade receivables, cash, trade payable, distribution cost, administration expenses, finance cost, bank loan, stated capital at 10 per share, revaluation reserve of buildings as of 1st April 2024, provision of income tax as at 1st April 2024, tax paid, dividend paid, retained earnings at the beginning date. Following adjustments are required to be made for the year ended 31st March 2025. Right? First one, the above trading stock is valued at the cost. I hope I am audible enough. Above trading stock is valued at the cost based on the physical stock as at 31st March 2025. Right? Physical stock. You may highlight it. Am I able to edit? No. Right. Physical stock. You may highlight it. Right? One item of trading stock costing 60,000 as at 31st March 2025 has been sold for 45,000 on 3rd of April 2025. Now this has happened after the reporting period. The reporting period ends on 31st March 2025. Now this stock has been sold on 3rd April 2025 after the reporting period. This has not been adjusted. Right? And it further says the estimated sales value should be sales value of all other items of trading stock as at 31st March 2025 are higher than the cost of those items. For other items, cost is less compared to the sales. Meaning, in other words, sales values are higher than the cost. Right? Company uses item method to determine the net realizable value of trading stock. Item by item method. You take item by item. Now, this is a very simple adjustment, Lamai. You can see the financial statements are authorized. If you come down, look at the last adjustment, which is the 16th, isn't it? 16th adjustment. The financial statements for the year ended 31st March 2025 were authorized by directors of the company on 15th July 2025. Remember that date, 15th July 2025. Okay. Now, prior to that date, inventory as at 31st March 2025 has been sold at 45,000. The cost of that inventory item is 50,000. No, 60,000. Right? So it provides evidence for the net realizable value at the date of reporting date. Right? So let me explain it here. Cost of inventory as at 31st March 2025 is 60,000. Now this has been sold on 3rd April 25 after the reporting period, but before the authorization date. Right? This is sold at 45. So it provides further evidence on the net realizable value as of this date. So NRV, net realizable value, is 45. Right? So NRV is less than the cost. So we need to write off inventory by 15. Write off. You may write these workings. Write off inventory by 15. So under other expenses, write inventory write off 15. Stock write-off 15. Okay. Under the expenses, write inventory or stock write-off 15. And they say that other items except this item have greater sales value compared to the cost. Therefore, there are no write-off. Right? So the first adjustment is done, as well as the last adjustment you have taken into consideration. So see, there are 16 adjustments. Of that 16, 2 have been done. So remaining 14 adjustments are there. Right? Got it? Right. The second one, always do it methodically. Like if you have done one adjustment, mark it. And if you have taken items from the trial balance, you mark it. And if you have a difficult adjustment, you skip it without marking it. Right? Then you have a proper way to do it. And even later time, you can come back and do the skipped adjustment. Right? That's why I told you this is like a game. All right. So the second adjustment, you can mark the first one. First one is done. Second one, during there are typos, Lamai. Sorry for that. During January 2025, a trading stock has been donated to a few schools. During January, the selling price of this stock is 150,000 and the cost was 110,000. No adjustment was made in accounts for the donated stock or donation of this stock. Right? So there is a donation. So donations, inventory drawings, all these are adjusted at the cost because these are not sales. So the sales value is given to cheat you. Don't get cheated. Okay. So forget about the selling value, take the cost and adjust it. Right. Now Lamai, we are given the physical stock. If you can see, the physical stock is given. So in that physical stock, this donated inventory is not included because this is the physical stock as at 31st March 2025. This donation happened in January, right? So in this physical stock, the donated inventory is not included. So we have to record it. How? So donations, if you make a donation, Lamai, always it is a expense. If you make a donation, right? So under other expenses, donation. 110. Don't take the sales value. The cost of the donated is stock. 110. Right under other expenses, donation. And if you can remember the double entry for the donations of inventory, the double entry is Lamai, donation account debit 110, where to credit? The purchase account, right? Purchase account, because you donate the items that you have purchased, right? Therefore, purchase account credit 110. Now, donation is an expense that comes here, purchase account credit, meaning purchase expense reduces. Now, where is the purchase? Purchases are included in the cost of goods sold. So, because of this credit entry, cost of goods sold is, yes, decreased, right? Because it is a credit entry. Got it? Therefore, the cost of goods sold as per the trial balance, if you look at, see, cost of goods sold is 650 minus 110, right? All right. So go back to the income statement. Cost of goods sold 650 minus 110. Then it will be 540. 540. Okay. So what did we do? We included the cost of the donated inventory and other expenses, cost, right? And then purchase account should be credited. As a result, the cost of sales will be reduced by 110. Got it? Do it. Great. Now we have done 3 adjustments, no, 2 adjustments. Then let's come to the next one. The composition of the property, plant and equipment as at 31st March 2025 shown in the trial balance is as follows. We have lands, buildings, equipment, motor vehicles. Cost of valuation, meaning is some items may be at cost, some items may be revalued in previous years. So the fair values may have been taken to the accounts. That's why the cost of valuation is given, right? Accumulated depreciation, but as of 31st March 2025, right? They are given. But my advice is don't write these balances, because these balances may be adjusted, change, right? So don't write these balances in the PP note. Rather skip this for a while and go to the next one. Okay. Number 4, the depreciation of property, plant and equipment based on the straight line basis at following rates have been calculated for the year and accounted. Look at it. So they have accounted the depreciation for the current year. Mostly their calculations may be incorrect, right? Mostly they are incorrect. So my advice is, if they give you the calculated depreciation for the current year, remove it. If you look at the previous past papers, you will see a similar situations. Mostly these calculations are incorrect. So my advice is remove the entry. So let's remove buildings 200, equipment 200, motor vehicles 675. Okay. And also we can see the 5th adjustment. 60% of the motor vehicles are being used for distribution of goods to customers, and the rest, that is 40%, is for the staff transport, right? 60% for distribution of goods, remaining 40% for the staff transport. Total motor vehicle depreciation has been included in the administration expenses. This 675 is included in the administrative expenses. Right, let's do this. Now remove the current year depreciation. Now ending balance is 815. This includes 200. Remove it. 850 ending balance. This includes 200. Remove it. Ending balance 1125. This includes 675. Remove it. Right. So I'm going to remove it. Now buildings ending balance is 815. That includes 200. So the beginning balance should be 650. Go to the PPE note. Accumulated depreciation. We don't depreciate lands. Why? Why don't we depreciate lands? Because lands have indefinite useful life, right? Because lands have indefinite useful life. Therefore, we don't depreciate. Buildings ending balance is 815 minus 200, 650, right? And then equipment 850 minus 200, 650 at the beginning. And then motor vehicles 1125 minus 675, it's 450. So what did we do? We removed the current year depreciation from the ending balances, right? Removing one entry is not enough, Lamai. From the other side, you have to remove the expense as well, right? Remove the expenses as well. Now we removed the depreciation from the accumulated depreciation, right? Write it. 615, 650, 450. Got it? And go to the expenses table and remove the calculated depreciation from the relevant category. Now, buildings depreciation usually we write under administrative expenses. So remove the buildings depreciation of 200. Remove it, right? And then equipment depreciation. Again 200. Remove it. And although motor vehicles are used for distribution of goods as well as staff transport, they have included the total depreciation of motor vehicles in the administrative expenses. So you have to remove total 675 from administrative expenses. 675 motor vehicle depreciation. Right? Okay. Right, my advice is, Lama, if they means if examiners give you the current year depreciation, don't rely on those calculations, remove them, right? Assume like you are expert than the paper setters. Have that confidence with you, right? And remove their calculations and do it on your own. That's my advice. Okay. Right. So you can you can't actually mark because we haven't done these adjustments perfectly, but we have removed the current year depreciation, right? So don't mark these adjustments. We will be using these values for the preceding adjustments. Therefore, don't mark them. And then come to the sixth one. Mindful about these, right? The value, cost, rates of depreciations, 60% motor vehicles, right? Let's come to the sixth one. On 1st April 2024, the company revalued its lands to the first time for 5 million. Very simple. First time revaluation of lands for 5 million fair value at the beginning. And the buildings to the second time for 2.4 million. Right? The remaining useful life and the residual value of buildings were reassessed on 1st April 2024 at the date of revaluation as 10 years and 300,000 respectively. No adjustments have been made in the books of account for the revaluation made on 1st April 2024. Okay, so let's take one by one. So if you are given an adjustment like this, Lamai, break that into parts. For example, here we have lands revaluation as well as buildings revaluation. Don't think both adjustments together, even though they are given together, right? Take land revaluation, do it, finish it, get into the buildings revaluation. That's why I told you there should be an order to do the question, right? And can you see, I haven't taken or I didn't take the cost of valuations because these values may be changed, right? So I didn't write these in the note. Got it? There is a way to do it, Lamai. So if you follow the correct way, it doesn't take much time. Of course, you can finish it within 36 minutes or 38 minutes. Believe me. Right. So let's take the land revaluation 5,000. Now it has not been adjusted, meaning this 4,500 is the cost because this is first time revaluation, right? So let's take, going back to the PPE, the land's value is 4,500. It should be the beginning balance, 4,500, and it has been revalued 5 million, 5,000. So you know that lands are not depreciated because of the indefinite useful life. Therefore, no transfer of depreciation on revaluation. Here also no transfer of depreciation on revaluation, right? So the value has been increased. Now to get 5,000 here, the fair value, you know, we have to add another 500 under revaluation. Asset has been increased. Asset has been increased. Increased means it's a revaluation surplus. First time revaluation surplus. You know the revaluation adjustment. First time revaluation surplus goes to other comprehensive income. Okay, other comprehensive income. So add 500 to the lands under revaluation and then go back to the income statement under other comprehensive income, land revaluation surplus. Land revaluation surplus. $500. This is actually the revaluation reserve change in the land revaluation reserve, but just write land revaluation surplus. Okay, that's done. And then the buildings. Buildings 4,000 value at the beginning is given, right? So that's the previous revalued amount, previous fair value. We can't say that 4,000 is the cost because it has been revalued in the previous year, right? So take that value to the PP note. Buildings previous revalued amount is 4,000. Previous revalued amount is 4,000, right? And it has been revalued at the beginning of the period, which has not been adjusted. So let's adjust. Now, buildings are depreciable asset. Therefore, the accumulated depreciation at the date of revaluation should be transferred to the asset from the accumulated depreciation. So the accumulated depreciation at the date of revaluation, which is at 1st April 2024, is 615. That should be removed. Therefore, under transfer of depreciation on revaluation, remove 615. I mean, I'm talking about 40 marks, right? For this question, you get 40 marks as well as this is a compulsory question. So this is very critical. If you don't do this question, you know, you are in a trouble. Okay. So remove it. And it will be transferred to the asset. So accumulated depreciation debit, reduced it, asset account credit, right? Asset account, transfer of depreciation on revaluation, 615 minus. Remember, from both sides you have to deduct because accumulated depreciation debit, asset account credit. So both accounts reduce. Okay. Now the fair value or the revalued amount of building is 2,400. Should I show it? Revalued amount is 2,400. See. So Lamai, you have to get the new value here, 2,400. New value should come here, right? After the revaluation adjustment. Then you can go backward. And if you go backward, you can find the revaluation surplus or deficit as the balancing figure. You know how to go backward, right? If you go from the result to the input, deducted item should be added back, added item should be deducted. Okay. So 2,400 minus 650, 15 should be added back, plus 615 minus 4,000. Added item should be deducted, minus 4,000. You get 985 minus. 985 minus. Minus means a deficit. Revaluation deficit is 985. All right. Write the revalued amount here and go backward and find the revaluation surplus or deficit. If it's a positive one like this, surplus, negative figure, deficit. But the buildings are revalued to the second time. So let's see what has happened in the previous revaluation. If you go back to the trial balance lamai, look at this revaluation reserve buildings as of 1st April 2024. So from the last year, there is a 800 surplus coming, right? So this time, in the second time, we get 985 deficit. So first of all, we have to remove or we have to reverse the previously recognized revaluation surplus. This 800 should be removed or reversed, right? Where should it be reversed? It should be reversed in the place where it was originally recognized. First time revaluation surplus in that year should have been recognized in OCI. So the reversal should be done in the same location, same place, right? So come to the OCI. Come to the OCI and write buildings revaluation deficit. And how much we have to reverse, Lamai? The previously recognized surplus to the extent of the previously recognized surplus. Now that was 800. This time deficit is 985. So we can reverse total 800. Total 800 we can reverse. All right. Total 800 we can reverse. But the deficit, second time deficit is more than that. 985. So the excess of the deficit, that is 185. How did I take that one? 985 minus 800. 985, the total deficit, minus 800, we took it to the reversal, and then the rest of the thing or the balance is 185. That should be included in the other expenses because it is a deficit, right? So go to the other expenses table. Other expenses table, write buildings revaluation deficit 185. Buildings revaluation deficit. What happens? Wait for a while. Okay. Under the expenses, buildings revaluation deficit 185. I hope that is clear, right? Now, Lamai, we can depreciate the buildings after the revaluation, right? So if I just show you the adjustment once again, this revaluation happened at the beginning. So beginning date accumulated depreciation was 615. We removed it, deducted 615 here as well as from the asset. And then the revalued amount of the fair value is 2400. We included that value here. And when we went backward and calculated the revaluation surplus or deficit, that if it is a negative figure, deficit; if it is a positive figure, surplus, right? This 985 deficit, but there is a surplus of 800 which has been recognized previously. We have to reverse it in the place where it was originally recognized. So we came to the OCI and did the reversal 800 because this is the place where it was originally recognized. Now after reversal of 800, still we have 185 deficit. So that 185 deficit was taken to the other expenses. I think it is clear. Now we can depreciate the buildings after the revaluation. Depreciation after the revaluation. After the revaluation. Can you remember the formula? Depreciation after the revaluation. The formula is fair value. Fair value means the new value, current value, right? Revalued amount less residual value divided by what? Remaining life. Remaining life, remaining useful life. Fair value less residual value divided by remaining useful life, right? Remaining useful life. So let's substitute figures and find the building's depreciation, and then let's look at whether their calculation is correct. That 200, right? They have given it. Let's see whether it is correct. So the fair value is 2400, which is the revalued amount, Lamai. We are given the residual value, isn't it? See, residual value is 300, this one. And the remaining life is given. See, remaining useful life, 10 years. So deduct 300, divide by 10. Very simple. Deduct 300, then it is 2100, divide by 10, 210. Now we are pretty obvious that their calculation of 200 depreciation is incorrect. That's why I told you, don't rely on their calculation. Okay, 210. And remember this formula. Got it? So Lamai, we can record the correct depreciation, 210. So include that in the administrative expenses, buildings depreciation 210. That's the correct value. Now can you see we removed the incorrect value, recorded the correct value, right? At the same time, go back to the PPE note and write the depreciation for the year under buildings 210. That's the correct one, 210. Okay, 210. Got it? 210. Right. So we have done the sixth adjustment in full. Then we can get into the seventh adjustment. And just look at Lamai, the other adjustments. Let's have a glance on those adjustments. See, sixth one done, you can mark it. This is done. And seventh one, it is a generator acquired on lease basis. Okay, we'll do that one as well. Seventh one. You know, always a leasing adjustment comes. On 1st April 2024, company acquired a generator on lease basis. In this regard, company paid 400,000 as the initial payment of the lease, except recording this payment into the equipment account. You may underline it. Now this down payment or the initial payment of 400,000 has been included in the equipment account. That is incorrect, because that should go to the right of use equipment, not equipment, right? Equipment and right of use equipment are two different things. Like motor vehicles and right of use motor vehicles are two different things. Okay, so we have removed it, 400. Except recording this payment into the equipment account, the cash equipment account and the cash account, no entries were made with respect to this lease. Present value of the lease payment as at 1st April 2024 was 2 million and the lease term was 3 years. The first annual installment of 800,000 was due on 31st March 2025. Due on means payable on 31st March 2025. Due on. But paid on 1st April 2025. What has happened? The rental, the lease installment should be paid as of 31st March 25, but it was paid on 4th April 2025. The interest rate implicit in the lease is 10%. All right. So we'll do the adjustment. Now, I'll use this space to write the lease liability account. So you under workings write the lease liability account. Lease liability. Lease liability. Have this account lease liability. I didn't look at the questions. Can you explain a company question with VAT? It's simple, Lamai. If you have VAT, basically a company would be a registered business for VAT. If the company is a registered business for VAT, the sales purchases should not include VAT. If the company is a registered business for VAT, VAT, right? The sales and purchases should not include VAT. So if they include VAT, remove them, take them to the VAT control account, right? Sales VAT, credit side of the VAT account, purchase VAT, debit side of the VAT account. And if there is a remittance of VAT to the government, the payment of VAT to the government, debit to the VAT control account and take the balance of the VAT control account. Most of the case that is a liability. So it will be coming under current liabilities, right? Under other payables, VAT liability. Very simple. And if you know the logic, it's very simple. Is it mandatory to write the equation for the ratios and the marginal costing? No, it's not mandatory. But my advice is to minimize the mistakes, you write the formulas in short form. For example, break-even point quantity, BEP divided by C, contribution per unit. Sorry, break-even quantity, fixed cost, total fixed cost FC divided by C, right? So if you write the formula in abbreviation or in short form, you don't do mistakes. My advice is write it. Otherwise, you will do mistakes. But answer for the question, writing those is not a mandatory. Okay. Then after taking OAR, if we want to calculate total production cost, if we multiply wrong OAR from actual hours, then the cost will be wrong. Do we lose marks? No. Assume when you get the OAR means overhead absorption rate, you do a mistake, then you will lose 1 mark for the OAR, right? 1 mark, depending on the error. And using the incorrect OAR, if you absorb the OAR to the production based on actual consumption, you don't lose marks, you get full marks. Do we lose marks if we forget to write the 3 zeros on top of the question in company? No, actually. So far, I haven't seen instances where marks have been cut if you don't write 3 zeros, the rounding, level of rounding. But I just asked you to write it because that's a standard requirement. LKS 1 requirement, the level of rounding and the reporting currency, right? So that's why I just asked you to write it. If you don't write, so far, no marks have been deducted, but they can reduce marks, right? It's a standard requirement. If you don't comply to the standard requirements, there is a chance of losing the mark. That's why I just started, because that doesn't take much time. I just tried rupees 1,000 at least in the first instance. At least in the company accounting question, because other like partnerships, they are not published financial statements. But of course, you need to write that as well, there as well, but at least in the company accounting, right? How do we identify the best basis for apportionment in overhead costing question? That's based on the cause and effect relationship. For example, if you have a department or division which is extensively use machinery, right? the absorption basis would be machine hours. On the other hand, if you have a department which heavily uses labor, the absorption basis may be direct labor hours. So look at the cause and effect relationship. What drives the cost? Okay. So subscription income means both life membership income and the subscription income from normal members. Yes, technically yes. Total subscription income, subscription income has two parts, normal as well as lifetime, right? So both are members. So the total subscription income is a summation of normal subscription income plus life membership income. Technically, yes. Goods drawings partnership, if say goods drawings other than current goods drawings partnerships, if say goods drawing other than current account debit purchases credit, no mention about physical stock or not, we have to adjust the closing stock also. Normal assumption is Lamai, the closing stock is taken on physical basis, like what we see in this company accounting question, right? Closing stock is adjusted on physical basis, right? Then in a partnership, if there is an adjustment saying that a partner has taken inventory for his personal use, current account debit, the cost of the item, right? Current account debit, cost of sales credit. It doesn't affect to the ending stock unless otherwise given in the question. Because normal assumption is closing stocks are valued based on physical stock. Now that physical stock doesn't contain the goods drawn by the partners, right? Those goods are in the partner's house now, right? So those physical stock does not include the goods drawn by the partners. Therefore, the double entry is current account debit, cost of sales credit. Can you share the Western Province paper, please, if you have? I don't have. You can request that from one of your friends. How to obtain the soft copy of the tutorial? I think it is shared. I'll ask organizers to share it once again. First time revaluation opening closing, second time revaluation opening closing. What do we have adjust in the PP note? Question is not that clear. First time revaluation opening closing. Second time revaluation opening and closing. What do you mean by that? Normally, my current year revaluation should be adjusted. It can be the first time revaluation, it can be second time or even subsequent time revaluation. The current year revaluation should be adjusted in the PP note, not the previous months. We did not record the inventory value in SOFP. Let's record it. Yes, we forgot it. Yeah. But sir, revaluation is done at the beginning of the period. Yes. Beginning of the period means current period transaction. Of course, an event, right? Beginning date is also relevant to the current period. Very first day, right? If it is like it is not the last day of the last year, right? It's the beginning date of the current year. So it falls to the current year period. What are the adjustments we recorded on OCI? OCI. And shall we write this as well, am I? Without that the question will not be balanced. So the inventory balance as per the trial balance, let me take it quickly. Trading stock 610, right? We had 610, and then we wrote off 15 and we donate, yeah, we wrote off 15, right? Donation went to the cost of sales. This 15 should be deducted. 15 should be deducted. Then it will be 595. 595. Right, as per the trial balance, it was 610 and we wrote off 15. Therefore, the value of inventory to be included in the other, sorry, current asset in the SOFP is 595. Right? Okay, other questions? Under OCI, we included two things: land revaluation surplus 500, building revaluation deficit, I mean the reversal of the previously recognized surplus 800. Screen is black. Now it is okay. Screen now done. Now okay. Why residual value is 3100? No, 3100. Residual value is 300. You might see like 3000. 300. Yes. Sorry, I wanted to know whether you are looking at it correctly. 300, right? But my answer is correct. When I write, I had write 3100, 300, right? Okay. Then, what is the correct method to get the TCI? By preparing income statements. Sometimes answer is not get it. This is the correct way. What I'm using is the correct way. Where would second time revaluation gain be recorded? If it is a previous deficit, second time surplus, first reverse the previous deficit in the other expenses and the balance of the surplus should come to the OCI. Okay, if you have a previous deficit, reverse it in the other expenses, and if you have a balance of the surplus, take that balance to the OCI. Then right now studying theories or practicing past papers will help to score marks. Yes, my advice is get the theory tute or theory note from your school or class and study it and do past papers for 10 years. For example, if you take company accounting, do past papers for 10 years. If you take equation, do past papers for 10 years. Take one topic and do it for 10 years. Then you will get lot of experience, lot of confidence, lot of knowledge. Right? That's my advice. And this time is enough if you plan your time. Can you give me 10 to 15 minutes break before 10? All right. Again, first time revaluation opening closing, second time revaluation opening closing, how we have to adjust in the PP note. Same answer. It doesn't matter whether it is a first time revaluation or second time revaluation. What matters is you take the current year revaluation. If it is a surplus, add it to the asset. Right? If it's a deficit, deduct it from the asset. That's it. Okay? Current year revaluation, surplus add, deficit deduct. No reversals here, right? Always deficit is a reduction of asset, always a surplus, an addition of asset. Please increase the volume a bit. Audio is very low and I can barely hear it. Is that? Normally, inherently, my voice is not loud enough. We'll do the question. Yes. Yes. So we have 10 minutes speech from the organizing team Lamai. So please get that information, which is very useful for your future career and your higher studies. Can we start the speech now? I'm sorry, I forgot it. Yeah, we'll give a break as well. But before that, shall we listen to the speech? Because that is important and you will get the benefit of that after the examination. I think you can.
Thank you so much, sir, for that amazing session. I'm sure everyone learned a lot and picked up some great exam tips. Now we will take a short break from the lesson and welcome our special guest speaker, Mr. Nikita Jaitunga, who will be sharing a few words about career opportunities through ACCA. He's an ACCA fellow on attorney at law and one of Sri Lanka's top ACCA lecturers, with over 15 years of experience teaching students across several countries, including two world fields. We are so happy to have him with us today. Good news, Mr. Rakita Jayaranga.
Guys, I believe I'm audible. Can you confirm? Can someone confirm whether I'm audible, please?
Yes, sir.
So, earlier I didn't hear the introduction part, but anyway, I will quickly get into the task that I have been given. So, basically, I will take few minutes of your valuable time just to explain a few important things that would be important to your career development. So I'm before you as a fellow member of the Chartered Certified Accountants of the UK. That is basically the qualification provided by PPIM, ACCA. So I will basically share the career path, the way that I chose my career path, and how I achieve certain things during that with the qualification that I received. So I will use both Sinhala and English when I'm explaining. So like you guys, ඔගොල්ලෝ වගේම A levels කරන කාලේ දැන් අවුරුදු ගොඩ කාලයකට ඉස්සල්ලා so A levels පටන් අරගෙන commerce stream එකෙන් I had a target that was to get into a university, a local university, because I did local A levels. So my target was to get 3 A's. So one thing that I should mention, you should always have a plan. Now O levels කරද්දී target එකක් තිබ්බා ඒ කාලේ අපේ තිබ්බේ distinctions. Distinctions හැම subject එකටම ගන්නවා කියලා plan එකක් තිබුණා. That I achieved. ඊට පස්සේ I'm using my qualification just to make a point, so I will come to that in a while. ඊට පස්සේ A levels කරද්දී then I had a target of getting 3 A's and getting a good Z score also, because I wanted to get into a local university. So commerce කරලා මම 3 A's අරගෙන ඊට පස්සේ then I had a choice whether to do a management degree or some other thing. Now මම ඒ වෙලාවේ තීරණය කරා distinction එකක් කරන්න. දැන් අපි commerce කරාම ඔක්කොමලා කැමතියෝ ජයවර්ධනපුර යුනිවර්සිටි ගිහිල්ලා management degree එකක් ගන්න. ඒ වගේ නැත්නම් ඒ කාලේ විදිහට accountancy degree එකක් ගන්න ඒ විදිහට. But I thought that I should be little different from the others. Therefore, I decided to join the Faculty of Law, University of Colombo. මං හිතුවා මම LLB එකක් ගන්නවා කියලා. ඊට පස්සේ මම University of Colombo එකේ law faculty එකට join වෙලා ඊට පස්සේ simultaneously I started doing ACCA. Now ඒ වෙලාවේ මම හිතුවා මම law කරන ගමන්ම ACC qualification එකක් කරනවා කියලා. මම මේක කියන්නේ ඕගොල්ලෝ දැම්ම decide කරන්න ඕගොල්ලෝ මොන වගේ product එකක්ද වෙන්නේ කියලා. මම පොඩ්ඩක් මේ branding ගැන කියන්නේ. මොකද අපිට ඕගොල්ලෝගේ වයසේදී මේවා කියලා දෙන්න කවුරුත් හිටියේ නැහැ. We had to do these things on our own. right? You are not small anymore. So you are doing your A levels. So after a few months or like, maximum another 1 or 2 years time, you will become an adult and you will have to make your own calls, decisions. ඒ හින්දා දැම්ම decide කරන්න මොන වගේ product එකක්ද ඕගොල්ලොන්ට වෙන්න ඕන කියලා. දැන් අපි ෆෝන් එකක් ගන්න ගියාම අපි කැමති එක්ක iPhone එකක්, Samsung වගේ ෆෝන් එකක් ගන්න. මොකද ඒකේ තියෙන features වලට, ඒකේ තියෙන quality එකට. එහෙම බලලා තමයි අපි ෆෝන් එකක් වුණත් ගන්න. වෙන products උත් එහෙම තමයි. අපි කැමති quality product එකක් ගන්න. හොඳට මතක තියාගන්න, you yourself is a product. ඒ ප්‍රොඩක්ට් එකේ වැලියු එක තීරණය වෙන්නේ ඕගොල්ලෝ ගන්න qualifications මත, අනෙකුත් ගන්න skills, ඒවා මත තමයි තියෙන්නේ. So you have to inculcate certain qualities, qualifications and experience into you to become a quality product එකක් වෙන්න. ඒ හින්දා තීරණය කරන්න මොන වගේ qualifications ගන්න. A levels වලට මගේ plan එක මොකක්ද? යුනිවර්සිටි එකට යනවද? එහෙම නැත්නම් ඊට පස්සේ ACCA වගේ qualification එකකට යනවද කියන එක දැම්ම decide කරන්න. මගේ product එක මම මොන විදිහටද මාව basically you have to sell yourself ultimately. So ඒක කොහොමද කරන්න කියලා දැම්ම decide කරන්න පුළුවන්. ඒකට මට අග්ගාලා ඔයගොල්ලන්ට පොඩි advice ටිකක් දෙන්නම් මගේ experience එකත් අනුව. එතකොට මම කිව්වා law faculty ගියාට පස්සේ I thought of doing an accountancy qualification also. I had several options. ඔයගොල්ලෝ දන්නවා chartered තියෙනවා, ICCA තියෙනවා, CIMA තියෙනවා. ඒ වෙලාවෙත් මම තීරණය කළේ හැමෝම කරන්නේ නැති qualification එකක් තෝරගන්න. ඒ අනුව මම තීරණය කරා ACCA කියන qualification එක ගන්න. And when I look back, I feel that was one of the best decisions I made in my life, choosing ACCA. එකට හේතුව මේකයි. දැන් ඕගොල්ලෝ A levels වලින් පස්සේ local university එකට ගියත් බැරි වුණත් හැමෝටම යන්න අමාරුයි තියෙන capacity එකත් එක්ක. එතකොට මොකක් හරි ඒගොල්ලෝ qualification එකක් කරන්න ඕන. එතනදී මට දෙන්න පුළුවන් තව එක advice එකක් තමයි ඒ qualification එක තෝරගනිද්දී ලේසිය බලලා qualification එක තෝරගන්න එපා. මොකද ලේසි qualification ඒ කියන්නේ හැමෝම කරන්න qualification එකක් එතකොට. එතකොට තමන්ගේ value එකේ product එකේ value එක අඩු වෙනවා. නමුත් globally recognized මම කියන්නේ ACCA එක හැමතිස්සෙම global passport එකක්. මොකද ඒ qualification එක ඔයගොල්ලෝට ගත්තොත් ලංකාවේ විතරක් නෙවෙයි වෙන රටක migrate කරන්න, වෙන රටකට ගිහිල්ලා වැඩ කරන්න ඒ අවශ්‍යතා ඒ ඔක්කොම හම්බ වෙනවා. ඔයගොල්ලෝ දැන් ඉන්න විදිහට නෙවෙයි තව අවුරුදු 5කින් 10කින් ඔයගොල්ලෝ ඉන්නේ. ඔයගොල්ලෝ බලන්න තව අවුරුදු 5කින් 10කින් මම කොයි තැනකද ඉන්න ඕන කියන එක decide කරද්දී ACCA කියන qualification එක global passport එකක්. මොකද මම කිව්වා වගේ ලංකාව විතරක් නෙවෙයි වෙන ඕන රටක recognition එක හම්බ වෙනවා. අනිත් එක ඔයගොල්ලෝ හොඳට මතක තියාගන්න තමන්ගේ qualification එක, ඒ කියන්නේ education qualifications තියෙන්න ඕන. ඊට අමතරව I'm sure that most of you are doing your lectures in English medium. You need to improve your language skills, especially English. That is extremely important. එතකොට ACC qualification එක global UK qualification එකක් හින්දා ඕගොල්ලන්ට associate කරන්න, ඕගොල්ලන්ට deal කරන්න හම්බෙන්නේ ලංකාවේ crowd එක විතරක් නෙවෙයි. වෙන ලෝකේ රටවල් 100 ගානක මේ qualification එක තියෙනවා. At some point you will be able to network with those members as well. Because the moment you become a member of ACCA or even a student of ACCA, you are a part of a global community. අපි එක experience කරනවා ලංකාවෙත් එක්ක මේ qualification එක ගත්ත අය පිට රටවල් වලට ගිහිල්ලා ඒ රටවල් වල work කරනවා, ඒ රටවල් වල අයත් එක්ක වැඩ කරනවා. එතකොට අර ලංකාව වගේ අපි island එකක හිටියට මේ වගේ qualification එකකින් පුළුවන් වෙනවා ඔයගොල්ලන්ට global recognition එකක් ගන්න. ඒක හරි ලේසියෙන් කරන්න පුළුවන් මේ වගේ qualification එකක් තෝරගත්තොත්. ඊට අමතරව now I didn't hear the introduction part, but I don't know whether it was mentioned. Now, I am practicing as a lawyer while being a fellow member of ACCA, and at the same time, and I'm an associate member of Chartered Institute of Sri Lanka. එතකොට ඔයගොල්ලෝ දන්නවා ලංකාවේ මේ accountancy qualification එක ගත්තොත් එහෙම chartered තමයි තියෙන්නේ. නමුත් මම මේ chartered එක ගත්තේ ACCA qualification එක හරහා ලැබිච්ච exemptions වලින්. ඒ හින්දා ඔයගොල්ලන්ට පේනවා ACC වගේ qualification එකක් ගත්තාම ඒකෙන් ඕගොල්ලන්ට වෙන qualifications වලට යන්න පුළුවන්. ඊට පස්සේ ඕගොල්ලන්ට හොඳම corporate sector එකක job එකක් හොයාගන්න පුළුවන්. එහෙම නැත්නම් තමන්ගේම businesses කරන්න පුළුවන්. ඒ වගේම ඕගොල්ලෝගේ network එක වෙන රටවල් වලට උනත් expand කරන්න පුළුවන්. ඉතින් මට මේ limited time period එකේ මට දෙන්න පුළුවන් ඔයගොල්ලන්ට උපදෙස් තමා දැනට කරන qualification එක කියන්නේ A levels වලට ඔයගොල්ලන්ට plan එකක් අනුව වැඩ කරන්න. If you are not confident enough to come to a conclusion I can get 3 A's, then you will not be able to achieve it. තමන්ට විශ්වාසය තියන්න ඕන මේ result එක මට ගන්න පුළුවන් කියලා. ඒ result එක ගන්න පුළුවන් කියන confidence එක ආවට පස්සේ the next thing that you should do is you have to work according to a plan. කැමැත්ත තිබුණත් ඒක achieve කරන්න plan එකකට අනුව වැඩ කරන්න ඕන. And I used to, when I used to lecture, I used to tell my students there are no alternatives for hard working. හැමතිස්සෙම මොන මේ අවස්ථාවේ වුණත් hard working කියන එක ඉතාමත් වැදගත්. ඒ අනුව A levels ඉවරන කලින් ඒකට plan එකකට වැඩ කරන්න. ඊට පස්සේ බලන්න තමන් මොන වගේ product එකක් වෙන්න ඕනද කියලා. එතනදී lazy qualifications වලට යන්නේ නැතුව ACCA වගේ globally recognized qualification එකකට යන්න. මොකද ඒකෙන් value එක වැඩි වෙන්නේ තමන්ගේ. ඉතින් ඒකට ඔගොල්ලොන්ගේ PPIM එකේ කට්ටිය ඉන්නවා ඔගොල්ලොන්ට අවශ්‍ය උපදෙස් දෙන්න. ඒගොල්ලොත් එක්කත් කතා කරලා once you're done with your A levels, then or even while doing A levels you can start this qualification. So finally what I have to tell you is I wish you all the very best for your exams and may all of you get through your exams with flying colors. Thank you very much, guys.
Thank you very much, sir, for that inspiring talk. Watch a quick career guidance video by PPIM now, which will give you an idea about the career paths you can follow after your A levels, and then we will continue with the second part of the seminar. So let's start with the video.
Where to start your career? Are you wondering what's next after your O levels, A levels, or double AT? Looking for a qualification that's recognized worldwide, future ready, and opens doors to endless career opportunities? Meet the future of career success. Lead in finance, business, sustainability, and even technology-driven roles. Get yourself placed anywhere in the world with AI-powered learning, digital mentors, and real-world skills. Equip yourself with data analytics, Python, cloud accounting, and fintech. ACCA isn't just about accounting. It's about becoming a global business professional. With over 240,000 members in 180 countries with over 500,000 students. This qualification redefines the future. When you hear ACCA, what's the first thing that comes to your mind? Is it tough exams, financial statements, audit? What if I told you that ACCA is less about being boxed into one role and more about holding a master key that can open dozens of different doors in the world of business and finance? This isn't just job roles, but a map of yourself with ACCA. So why is ACCA so powerful? It gives you 3 superpowers that employers are desperate for. Number 1, technical brilliance. You will have a rock-solid understanding of financial reporting, taxation, and audit. This is your foundation. This is what makes you the go-to person for the what and the how. Roles like financial accountant, auditor, and tax specialist live here. Number 2, business partnership. This is where it gets exciting. ACCA teaches you how to use those numbers to tell a story about the business. You don't just report on the past, you influence the future. You become a finance business partner, sitting with the marketing team, the sales team, helping them decide which projects to fund, which markets to enter. This is the realm of the management accountant and the FP&A analyst. Number 3, strategic leadership. The ACCA curriculum is designed to build strategic thinkers. You learn about governance, risk, and leadership. This is the path that leads to the C-suite. This is how you become the financial controller who ensures the company's financial health, the head of finance who leads the team, and ultimately the finance director who shapes the company's strategy. Let's make this personal. Let's imagine your future self in 5 years. Are you a futurist? Are you an influencer? Are you a guardian? Are you a leader? Are you a detective? You could be a forensic accountant unraveling financial fraud, working like a detective with spreadsheets. Are you a futurist? You could be a financial analyst or in financial planning and analysis, building models to predict the company's performance next quarter, next year, in 5 years. Are you an influencer? You could be a finance business partner, being the crucial link between finance and the rest of the business, using your numbers to convince people and drive change. Are you a guardian? You could be in compliance or risk, making sure the company navigates safely through complex regulations. Are you a leader? You could be on the fast track to finance manager and finance director, steering the entire ship. You name it, we've got it. And the beautiful thing is, you don't have to decide this today. ACCA gives you the versatility to try different paths. You can start in audit, move to a commercial analyst role, and then step into leadership. Your career is not a ladder, it's a climbing wall, and you can chart your own unique path. ACCA exemptions to top professional qualifications: CA Sri Lanka, CIMA, AAT, ICAEW, CMA, CPA, and many other qualifications. Exemptions may vary based on the regulatory requirements. You can also get a BSc degree from a top UK university. PPIM is proud to be Sri Lanka's preferred ACCA institute. PPIM is the only institute in the country to produce world rank 1, 2 and 3 in the year 2023 and 2024. Something that proves the quality of PPIM's teaching and student support. You can study with PPIM in Colombo or Kandy, and even through the partnerships in India, the Maldives, Vietnam and the UAE. You will feel connected to a global ACCA community. PPIM's lecture panel includes 21 Sri Lankan prize winners and even 2 world prize winners. So you will be learning directly from those who have already achieved at the very top. PPIM also has a revolutionary LMS designed to make your study journey easier, smarter and even more flexible. And most importantly, with the PPIM Job Bank, you will get access to internships and job opportunities that help you take your ACCA qualification into a successful career.
Amazing video. I'm sure our students now have a clearer idea of how far ACCA can take them. Now we will have a short break and Sir Sandaruwan will be continuing within 5 minutes. Thank you very much.
Right. So we are discussing the company accounting part. Actually, I took much time because I answered 4 questions which are very valid and important questions, right? So don't think about the time spent, and during this session I said a lot of important points, right? So let's get into the next adjustment, and then the other questions can be answered later on. So I'm coming to the adjustment number 7, isn't it? Actually, I read this adjustment, the 7th one, On 1st April 2024, company acquired a generator on lease basis. In this regard, the company paid 400,000 as the initial payment of the lease. Except recording this payment into the equipment account and cash account, no entries were made with this respect. The present value of the lease payment as at 1st April 2024 was 2 million and the lease term was 3 years. The first annual installment of 800,000 was due on 31st March 2025 but paid on 4th April 2025. The interest rate implicit in the lease is 10%. So there is an error correction. What is that error? The initial payment of 400,000 is included in the equipment. That is incorrect. So we will correct it. So in the equipment, you can see the balance. As per the trial balance, equipment balance is, you can see 2,000, right? 2,000. Now this balance should include that 400 as well. That should go to the right of use asset, not to the equipment in PPE. Got it? Therefore, from that 2,000, deduct 400. And that should come to the cost of the right of use asset, 400. It is an error correction. Remember, the initial payment for a lease should go to the right of use asset cost, right? Right of use asset cost. Now we corrected that error. And then they say the present value of lease payment as at 1st April 2024 was 2 million or 2,000 in thousands. So the double entry for that is, Lamai, the cost of the asset debit 2,000, right of use asset debit, lease liability credit 2,000. Right of use asset. Got it? Present value of lease payment, right of use asset debit, lease liability credit. What's the double entry for the initial payment, Lamai? Right of use asset debit, cash account credit. Now they have credited the cash account, but they have included that 400 in the equipment. So we had to remove that from the equipment account. So equipment account credit, right of use asset debit. Got it? And then the interest rate implicit in the lease is 10%. So this is the beginning balance of the lease liability. We have obtained this asset under lease at the beginning of the period. So we can calculate the interest for the current year. Got it? Because we have acquired this asset at the beginning. But if you acquire the asset at the end of the period, there is no lease interest for the current year. So carefully look at the date of acquisition. If the acquisition date is the beginning date, yes, we have the interest expense. Otherwise, we don't have. Okay. I mean, if it is acquired at the end of the period. So here, this is acquired at the beginning of the period. So this into 10% interest. Always remember, Lamai, the beginning balance of the liability multiplied by the interest rate implicit in the lease. Beginning balance of the liability multiplied by the interest rate implicit in the lease, right? So 2,000 into 10%, 200 interest. That should go to the finance cost, right? So go to the expenses under finance cost, lease interest 200. So what did we do? Lease interest expense account is recognized at 200 and lease liability account credit 200. Got it? Right. Going back, the installment value is 800. But see, it should be payable on 31st March 25, end of the reporting period, but paid on 4th April 25, right? So what's the adjustment? Now it should be transferred to a payable account. Payable account credit, lease liability account debit 800. So that is another payable. So under note number 8 in our question, write lease rental payable, lease payable 800. lease payable 800. So that is an accrued expense, not accrued expense, accrued liability. Okay, it should be payable on 31st March, but not paid as of 31st March. Got it. Now you can balance the lease liability account. Credit side 2200. 2200 minus 800, carried down balance is 004 1400. So balance is 1400. You know that you have to divide that balance into two components. One is current liability, the other one is non-current liability. Current and non-current. So what is current? The next year capital component, right? So next year installment is also 800 because we are going with the fixed installments, right? Even though we can go with the variable installments at advanced level, when we do calculations, we do or we based on fixed installments, right? So next year installment is also 800, and next year interest should be deducted from this to get the capital component, I mean the loan component, right? Therefore, the next year interest is, the next year beginning balance is 1400, that into 10% implicit interest rate. 1400 is the next year beginning balance, that into 10%. That's 140. Minus 140, 660. Right? 660. And the remaining balance, I mean the 1400 minus 660 is the non-current liability. Got it? So non-current liability can be taken as the balancing figure. Total liability 1400 minus current liability 660. So non-current component is 740, if I am not mistaken. 1400 minus 660. Yes. Right. So current liability is 660, non-current liability is 740. I think it is clear. Now here you have to remember, if the installment is due and it is payable, take it to the other payables. That's the correct way. Okay. Got it? Done? Okay, let's take these two balances to the SOFP. Current 660, non-current 740. So come to the SOFP. Under current liability, lease liability, lease liability balances to the SOFP, statement of financial position. Under current liability, lease liability 660, non-current liability, lease liability 740. All right. And then we need to depreciate the right of use asset. Now, how do we depreciate a right of use asset? If we in the sense the lessee, the company, our company, is getting the legal ownership at the end of the lease term. If we are getting the legal ownership at the end of the lease term, we depreciate the lease asset or right of use asset based on the useful life, right? Based on the useful life. But if we don't get the legal ownership at the end of the lease term, meaning we have to give it back to the leasing company end of the period, right? If we don't get the legal ownership, we have to depreciate the asset based on lower of useful life and lease term. Lower of useful life and lease term. In this case, what do they say? They don't say whether the legal ownership is transferred to the lessee or our company or not. So in a case like this, we assume the legal ownership is transferred to the company, right? So based on that, we can depreciate the asset. We'll take equipment depreciation rate 10%. Right? 10% means, you know, that under straight line basis, useful life is 10 years. Right? 10 years. 10% means 10 years. So based on this ratio, I mean percentage, we will depreciate the right of use equipment as well, because this is a generator. Right? So here, Lamai, we are not given whether the legal ownership is transferred to the company or not. So let's assume in a case like this, the legal ownership is transferred to the company. Based on that, we can depreciate the asset based on useful life. If the depreciation rate is 10% on the straight line basis, 10% means, you know, 10 times to fill the 100, right? Therefore, useful life is 10 years. So coming back to the cost of the right of use asset, 2,400. Depreciation, if you divide this by 10 years or 10% of this, 240. Accumulated depreciation 240. Okay, remember, if the legal ownership is not transferred to the company, take the lower of useful life and lease term, right? 240. And this is an equipment. Therefore, it should come to the administrative expenses. Right of use asset depreciation 240. Right of use asset depreciation 240. Got it? Right of use asset depreciation 240. Right. So if I show it once again, in the accumulated depreciation of right of use asset, the current year depreciation 240 should be written, and that is an administrative expense, should be included in the administrative expense as right of use asset depreciation. Right. Now, Lamai, if you just look at the other adjustments, number 8 is something related to the bank loan. Number 9 is unearned service revenue, right? Which is an adjustment taken from the SLFRS 15 revenue. Number 10 is income tax. Number 11 is warranty obligation. Number 12 is impairment loss provision. And number 13, capitalization of retained earnings or bonus issue. Number 14 is destroy of a building after the reporting period. Number 15 is directors proposed dividend. Right? So it's clear that there are no adjustments. So what we can do is we can do the other adjustments relating to PPE. So come back to the third adjustment. So we took lands, we took buildings, now we took equipment as well, and motor vehicles. No other adjustments relating to motor vehicles. So we can take motor vehicle cost as well. Okay, 4,500. Write it. Come to the PPE note, we can complete it. Now equipment balance is at the beginning 2,000 minus 400, 1,600. Motor vehicle, no adjustments as 4,500 as the beginning balance. Right? Actually, most of the adjustments in a company accounting question will come from PPE and related to, adjustments, right? Now we can depreciate, and we have done the depreciation of buildings, and we can see equipment during the current year. There are no additions, there are no disposals, there are no at the beginning. Depreciation rate of the equipment is 10%. So current year depreciation into 10%, right? 1,600 into 10%. We will do this as well. Motor vehicles depreciation rate is 15%, right? So 4,500 this into 15%. It's 675, isn't it? 4,500 into 15%, 675. Okay. So we'll take the expenses. This is an equipment, so this should come to the administrative expense. So come to the expenses, under admin expenses, equipment depreciation correct value is 160. Can you see the earlier calculation? Their calculation is incorrect. They gave us the equipment depreciation as 200, but it should be 160. So what did we do? We removed the incorrect depreciation 200 and recorded the correct depreciation. Now you should know the process. Okay. And if you take the motor vehicles depreciation 675, motor vehicle depreciation 675, and they say in the fifth adjustment, look at this, 60% of motor vehicles are being used for the distribution of goods and remaining 40% for administrative, I mean staff transport. Therefore, this 675 of that 60% should come to the distribution cost and remaining 40% should come to the administrative expenses. Okay, right. So of this 75%, sorry, 60%, no? 60% distribution, remaining 40% admin. 675 into 60%, I get 405, right? And remaining 675 into 40%, 270, right? So take this into the distribution cost, motor vehicle depreciation 405, admin expenses, motor vehicle depreciation, the remaining balance 270. And if you look at their calculation, it is correct actually, right? 675, that is correct. But there is an error. Why? The total depreciation has been recognized in administrative expense. The correct way of doing it, 60% should come to the distribution cost and remaining 40% should come to the administrative expenses. Now, Lamai, we have done all the adjustments up to the 7th adjustment. See, we have done the first one, second one, third one, fourth one, fifth one, sixth one, 7th one. So you can mark all the adjustments up to 7th adjustment. Great. All the adjustments up to 7th adjustment. Right. So let's get into the 8th adjustment. Now, rest of the adjustments are a bit easy, Lamai, because most of the adjustments come from the PPE. They are a bit difficult, but if you do those adjustments, the rest of the adjustments are a little easy. Okay. 8th one, 1/4 of the bank loan as at 31st March 2025 ending date is to be repaid during the year ended 31st March 2026. That means the next year. So 1/4 of the bank loan is payable in the next year and 3/4 the balancing figure after next year. So next year payable is current liability, after next year non-current liability, as we did with the lease liability. Okay. So the bank loan amount in the trial balance is 2,400, right? Bank loan amount of the trial balance is 2,400. Of that, 1/4, 600. 600 should come to the current liability, come to the SOFP. Under current liability bank loan, 600. Remaining 1,800 should come to the non-current liability. It is same as the lease liability. Next year payment, current, after next year non-current. Got it. Next year current, after next year non-current. All right. And then we are going to the adjustment number 9, which is a bit of a difficult one. See this. I made it from the SLFR 15. Now look at this. actually I tried to include a few important adjustment into this company accounting question because this is a seminar. So if you learn new concept, new things from these adjustments, that's my purpose, right? I wanted to include some important adjustment into this question, right? Ninth one, unearned service revenue in the above trial balance relates to an advance received on 1st February 2025 for a service to be provided in March 2025. So it's an advance received on 1st February 2025. The service to be provided in March 2025. Now there is an unearned service revenue. So if you go back to the trial balance, you can see service revenue and then unearned service revenue 300. So can you have an account, Lamai? Unearned service revenue 300. Have an account. Right, shall I erase this part? Right, I'll take another page. So if I prepare an account called unearned service revenue, it's a liability account, remember, right? So it has a balance of 300. As well as prepare a trade receivable account. Trade receivable account. It has a balance as per the trial balance. Trade receivables 1200. 1200. Okay. And in the adjustment they say look at this. The company provided the agreed service to the customer in March 2025 at a total consideration of 550. Now, as agreed, the company has provided the service to the customer in March 2025. Here, the total consideration is 550. The remaining balance of this contract was received in cash on 31st March 2025 and this has been recorded as cash sales. What's the remaining balance, Lamai? Now, of this 550, 300 was received as an advance, right? So, the remaining balance is 250. So, what have they done? They have recorded that 250 remaining balance as cash sales, cash account debit, sales account credit. Okay, except for recording this cash receipt, no other entries have been made during the year. I mean, that is an error. So what we can do is, we can recognize the total service revenue because it is performed, it is done, right? So the performance obligation is satisfied. Therefore, we can recognize the total revenue of 550. Let me do it like this. So we can add that to the service revenue, right? So if you see in the trial balance, the service revenue is 1800. Should I show it? Service revenue 1800. So we have to add another 550 because the service is performed, right? So please come back to the revenue, note number 1, revenue. Their sale of goods, we will say as sales, and then service revenue, service, right? So service revenue, it was 1800 as per the trial balance. Now we have to add another 550. Got it? 1800 as per the trial balance plus another 550 should be recognized. So total service revenue is summation of these two, 2350. 2350. 2350. Got it? And service revenue credit, it's an income, no? Service revenue credit, debtors debit. Oh my God, I am getting many questions now. I have 67 unanswered questions. See? I can't do all the things at once, Lamai. But I'll explain all as much as possible after the adjustments, right? Give me some time. So service revenue credit 550, and also remember my in a seminar like this, try to learn unknown things, new things. Okay, if you learn the same thing, known things, no point of joining for a seminar like this. That's why I'm emphasizing the important aspects. Okay, so service revenue credit 550, debit trade receivables 550. 550 should be debited to the trade receivables. Service revenue. The double entry is trade receivables debit 550, service revenue credit 550. Okay. And now Lamai, the remaining 250 has been received. Now earlier we received 300. Now the remaining 250 has been received on 31st March. It has been recognized as cash sales. That cash entry is correct. Cash account debit, it is correct. But sales account credit, incorrect. It should be credited where? Debtors control account or trade receivables account. So we have to take it from the sales account because it is included in the sales account as cash sales, right? So sales account debit, what is this? Cash receipt, 250, trade receivables credit. Sales account debit on the other hand, trade receivables credit 250. Write it. Trade receivables credit 250. Okay. Right. Trade receivables credit 250 and come to the sales under note number 1. Now, as per the trial balance Lamai, you can see the sales value is 6,750. Now, this includes 250. That's incorrect. That's a receipt from a debtor. Therefore, I'll write it here, 6,750 minus 250. The correct sales figure is 6,500. Correct sales figure is 6,500. Okay. The simple thing, Lamai, if you have both sale of goods and service income, take a note and write the breakup here and take the total, take it to the income statement. Very simple. And remember, it is a note, not a working. Right? So we corrected the service revenue, we corrected the sales as well. So go back to the debtors control account. Now, Lamai, the remaining, I mean the earlier 300, now is still, it is still in the unearned service revenue. Now it should be transferred to where? Debtors control or trade receivables, because the service has been performed in full. Therefore, no point of keeping this liability advance payment. So debit unearned service revenue 300, trade receivables credit 300, unearned service revenue. No point of keeping the advance, right? So it should be settled off or set off against the trade receivables balance. Now there is no balance in the unearned service revenue because it balances. But if you balance the trade receivables, the debit side is 1,750. 1,750 minus 550. Is it 1,200? Carry it down. Hope yes, ne? Yes. Okay, there is no unearned service revenue. Now, this is a very good adjustment, remember. All right. You might haven't done this kind of adjustment previously, but now learn. a simple as far as 15, you can do it because you know the realization concept, right? Okay. Now we have done the adjustment number 9 as well. As I told you, Lamai, I have included some take more than 36 minutes or more than 1 hour, but still if you learn something, that's my purpose, right? And if I take this adjustment first, Lamai, look at the 12th one. 12th adjustment, they say 10% of trade receivables as at 31st March 2025 should be provided as an allowance for impairment loss. 10% of trade receivables, right? So if you look at the trial balance, there is no provision for or allowance for impairment loss. There is no allowance for impairment loss. So to the first time, we have to make an allowance for impairment loss. Got it? 10%. So very simple, Lamai. The trade receivable balance is 1,200. Of that 10%, allowance should be 120. Right? The correct trade receivables balance is 1,200. Of that 10%, 120. So this is the first time that we provide this allowance. So this is an expense, right? So take this to the take this to the distribution cost. Impairment loss 120. Impairment loss under distribution cost 120. Got it? And then you take the carrying amount of debtors or carrying amount of trade receivables that should be presented as trade receivables in the SOFP, right? So gross carrying amount is 1,200, and from that deduct the allowance for impairment loss 120. So carrying amount of trade receivables to be presented in the statement of financial position under current asset is 1,080. 1,080. Okay, 1,080. So take it to the SOFP under current asset trade receivables 1,080. And you can do this question once again. Okay, send your questions. I'll take them at last, and then Usman, you're asking ROUA depreciation 800. I think you based on the lease term. Lease term is 3 years. So 2,400, if you divide by 3 years, you get 800. But we can't take the lease term if we get the legal ownership, right? So here it is silent. So in a case like that, Usman, assume the legal ownership is transferred to the company end of the lease term, right? So if the legal ownership is transferred to the company, we depreciate the right of use asset based on the useful life. So in the above adjustment, it says that equipment depreciation rate is 10%. Based on that, I assume the useful life of equipment is 10 years because 10% means 10 years, right? So that's why 2,400 I divided by 10 years, then I got 240, right? Your argument is correct if the ownership is given back to the leasing company end of the lease term. I hope it is clear. Right. And then we can get into the 10th adjustment. Look at it. Rupees 80,000 was paid as the last payment of income tax for the year ended 31st March 2020. Should be for. This should be 4. Make it, it's a correction. Rupees 80,000 was paid as the last payment of the income tax for the year ended 31st March 2024. Okay, should not be 2025. Got it? Last year payment. And this is included in the administrative expense. You know, tax paid is not an administrative expense. So you can remove it, first of all. So what we can do is we can go to the expenses table, and from administrative expenses deduct 80. Tax paid, deduct 80 from here. Right? And then they say the total income tax liability for the year ended 31st March 2025, the current year, is estimated at 470. So this is the total tax liability for the current year. Now, if you look at the trial balance, there is a tax payment, tax paid. Now, this should be obviously for the current year, because last year payment 80 was included in the administrative expense. Therefore, this 230 should relate to the current year. Got it? Current year. So, let me write like this: tax payment. Tax payment, you know, you have to break this into two parts. Last year payment, that is 80, and current year payment, that is 230. Okay, always break the tax payment into two: last year payment, current year payment. And if you look at the trial balance, provision of income tax as at 1st April 2024, last year provision is 75. Let me write it here. Provision for the last year is 75. And you know that the last year payment is the actual one. This is the actual one. If you look at from that angle, this provision is not enough. By how much? By 5. That's called as under provision. Got it? Last year payment is the actual. So if you look at from that angle, the provision for the last year is not enough. By 5. That is called as under provision. And they say the current year total liability, tax liability, is 470. So total liability for the current year is 470. Right? Yes. Of that, 230 is paid. Therefore, remaining balance is payable. How much? 470 minus 230. It's 240. And you need to have this working for income tax adjustment. So last year under provision is 5. This year total is 470. Of that, 230 is paid. Another 240 is payable. Write it. Got it. Now we can complete the income tax adjustment. Remember these figures. Under provision is 5. Total liability is 470. 240 is payable. So come back to the income tax note. Where was it? Here. Income tax. It has two components. You know it. 2024-25 current reporting period total estimation, which is 470. Right? Current year total 470. As the other part, last year over or under 23-24, we got under provision, isn't it? Under provision of 5. If it is an under provision, add it to the current year total. If it is an over provision, deduct it from the current year total. Right? Under provision, add it. Over provision, deduct it. Very simple. So total expense for the current year 475. Total expense is 475. Got it? Current year 470, last year under provision 5. So total expense is 475. Okay, and that 240 payable is a current liability, so it should come to the face of the SOFP, right? Not as other payables. It should be a separate line item under current liability, income tax provision, 240. This is the answer. Tax provision, a separate line item, 240. All right. You may be tired, but let's continue this, Lamai, because you know that without sacrificing things, you can't achieve targets. You can't be success, right? You have to sacrifice things. You have to sacrifice your time, energy to get good results. Okay, but after that, after that sacrification, you can be happy. If you turn back, you are happy. Okay, right. So we come to the next adjustment. Eleventh one, company started offering warranty for goods sold to customers with effect from the current year. Now it has been started from the current year. It is reliably estimated that 2% of revenue will be required to repair the goods sold under warranty. 2% of the revenue. Now, from what revenue, Lamai? Should be sales revenue, isn't it? Because goods, now this is all about the sale of goods, right? So it is obvious that 2% of the sales revenue, right? Not the total revenue. So we'll take it very simple. Now we corrected the revenue. See, sales revenue 6,500, right? So warranty is offered for the service. Sorry, warranty is offered for the good, right? Therefore, 6,500 into 2%. 6,500 into 2%, I get 130. So this is the first year that they offer the warranty. There is no previous balance. There is no previous balance, right? So 6,500 into 2%, 130. It's a current liability. Under current liability, right? Warranty provision. Warranty provision. How much? 130. How did I get that? 6,500 into 2%. On the other hand, it is an expense. Therefore, take that to the distribution cost. In the distribution cost, warranty expense. Warranty expense 130. Warranty expense 130. Very simple, right? So first of all, you need to correct the sales figure. We corrected it at 6,500. That into 2%. So 130. Distribution cost, warranty expense 130. Current liability, warranty provision 130. Now look at, now compared to the PPE adjustments, these are simple, right? So that's why I told you, don't give up. Right? Do the question until you come to the last requirement. Okay, if you complete it, you will get marks, even though some answers are incorrect. That's my advice. Right. And then we have done the 12th one, right? This is done. 13th one. Company capitalized retained earnings for 1 share for every 7 shares held as of 31st March 2024. The consideration of a share is 15 rupees. No adjustments have been made in this regard. Now, capitalization of retained earnings means bonus issue. Now, you know that for a public limited company, there can be 3 share issues. One is public issue, where you get money from the share issue. You issue shares to the general public. And then the right issue, you issue shares to the existing shareholders by giving a priority. And here also you get money, but from existing shareholders. The third share issue is bonus share issue. Bonus share issue is also called as capitalization of retained earnings. Capitalization of retained earnings. Okay. So this is a bonus issue. So the basis is 1 for every 7 shares held. So we can go back to the stated capital. Look at the stated capital value is 1,400. Price per share is 10. Now if you divide 1,400 by 10, you get number of shares issued, right? Let's take it. 1,400 is the value, and this has been obtained by issuing shares at 10 rupees. The number of shares issued is 140. Got it? 140 in thousands, right? So they are giving free shares, free of charge shares. That's the meaning of bonus issue. We don't get money. There is no cash flow from bonus share issue. So they are giving bonus shares 1 for every 7 shares. Every 7 shares held. 1 for every 7 shares held, right? Then it is 20,000. 20,000 in thousands 20. The consideration of a bonus share is, they say, as per the adjustment number 13, 15 rupees. So this is number of bonus shares. This into 15 rupees. The value of the bonus share is 300. Value of the bonus share is 300. Correct? So it has not been adjusted. So we have to adjust it. So how to adjust? Retained earnings deduct 300. Deduct 300 from retained earnings and add 300 to the stated capital. Okay, take it. And those who have done this can deduct 300 from the retained earnings in the statement of changes in equity and add 300 to the stated capital in the changes in equity statement. So let's go back. Here we will write the balances later. Balance as at 1st April 24, and then capitalization of retained earnings. Capitalization of retained earnings, deduct 300 from the retained earnings, add that 300 to the stated capital ordinary shares. Now you can see there is no impact on the equity, right? One component of the equity reduces, the other component of the equity increases. Therefore, there is no impact of the bonus share on the equity. And also remember, we don't get money, cash, there is no cash flow, but number of shares increase. Got it? Now earlier we had 140, now we issued another 20 free of charge. So how many shares at last? 140 plus 20, 160. Remember those things for ratio calculations like dividend per share, earnings per share, right? Number of shares is now 160, 140 plus 20, right? Then 14th adjustment, a building with a carrying amount of 1.8 million as at 31st March 2025 was partly destroyed by a fire arose on 21st April 2025. There is typo mistakes. 21st April 2025, right? So this is after the reporting period, right? After the reporting period, and this doesn't provide further evidence as of 31st March 2025, because as of 31st March 2025 the fire had not been occurred. Fire occurred after the reporting period, and there is no evidence. Therefore this is non-adjusting event, not an adjusting event, non-adjusting event, but it is material, right? Important. Therefore we have to disclose it. And remember, the fire had been occurred after the reporting period. As at the reporting period, there is no evidence. Therefore, this is non-adjusting event. You need to disclose. Write it under adjustment number 9. Here I ask you to keep some more space, right? So adjustment number 9, right? You have to disclose it. Write that sentence simply. Simply we can write a building with a carrying amount of 1.8 million. Write it. Building with a carrying amount of 1.8 million. Building of a carrying amount of 1.8 million. Has been destroyed by a fire. Building with a carrying amount of 1.8 million has been destroyed by a fire. Has been destroyed by a fire on 21st April 25. On 21st April 25. Just write it. A building with a carrying amount of 1.8 million has been destroyed by a fire on 21st April 25. Right? The next one. Now see, these are simple adjustments, disclosures. And remember, disclosures are also a part of the financial statements. Right? So they are coming under the notes. Next one. On 31st March 2025, ending date of the current reporting period, directors of the company proposed a final dividend. This is a proposed dividend, right? Final dividend of 2 rupees per share for the ordinary shareholders for the year ended 31st March 2025. You know that proposed dividends or dividend declared are not recognized as a liability, right? Only the dividend payment, which is called as interim dividends, are recorded as a liability, not as a liability, as a cash payment. But proposed dividends, which is also called as dividend declared. Remember, proposed dividends is equal to dividends declared, are not recognized as a liability. They are unadjusting events. Okay. What we can do is, as this information is material for the stakeholders of the company, you need to disclose that. So the 10th disclosure note, remember, for these disclosures, you get marks, right? You get marks. So write board of directors, just write like this, BOD has proposed, BOD has proposed rupees 2 per share dividend, rupees 2 per share dividend to ordinary shareholders, OSH, to ordinary shareholders, OSH. Just write in abbreviations. BOD has proposed rupees 2 or 2 rupees dividend per share for ordinary shareholders, OSH. Write down last adjustment is also considered the authorization date. Now what we can do, we can take the, now remember, now I told you at the beginning, once you have done all the adjustments, like 80% of the marks have been obtained, like 30 or 32 marks have been obtained, right? 80% mean A grade. Got it? Now you have to be very quick recording other items. So we'll take one by one. Most of the items have been now taken because of the adjustments. So sales we took, service revenue we took, unearned service revenue we took, cost of sales we took, property, plant and equipment we took, other income 130. Take it. Other income 130. Note number 2. Note number 2, just write other income. Other income 130. Right? Other income 130. And then we have taken the trading stock, trade receivables we took, cash 420. take cash to the current asset. Cash 420. Current asset, cash 420. Cash 420. Complete it. Don't give up until you achieve the final target, right? Then trade payables 1420. Trade payables 1420. 1420. Then distribution cost 465, administrative expenses 1050, finance cost 260. Take them to the expenses table. Come to the expenses table and write. Distribution cost 465. Administrative expense 1050. Then finance cost 260. Four 65, 1050, 260. Great. And then bank loan has been taken. Stated capital, this should be the beginning balance. And then revaluation reserve beginning balance, provision for income tax actually taken. Now these two balances and retained earnings beginning balance should come to the statement of changes in equity, right? So let's take these balances. Stated capital 1400, revaluation reserve 800, retained earnings 2100. Take them to the changes in equity statement. Beginning balances, ordinary share capital 1400, revaluation reserve 800, retained earnings 2100, the beginning balances. And then we have provision of income tax. It is taken and adjusted, tax paid, taken and adjusted, dividend paid. Lastly, dividend paid. This is the interim dividend, right? Dividend paid during the year. So it should be deducted from the retained earnings. How much? 80. Done. Now what can you do, Lamai? Take the totals to the front. Take all the totals to the front and then balance from the beginning. Okay. We'll take one by one. Please help me. I'm taking totals from this table first. Distribution cost total 405, 120, 130 and 465. It's 1120. If I am mistaken, please let me know. Administrative expenses minus 200, again minus 200, minus 675, plus 210, plus 240, plus 160, plus 270, minus 80, plus 1050. I get 775. Please confirm this. And then other expenses 200, 310. Here 460. Are my answers correct? Can anyone confirm? Are my answers correct, Lamai? Now take all these totals to the front. Yes, great. I'll take them. Distribution cost take these. distribution cost 1120, administrative expenses 775, other 310, finance cost 460, right? Then this is done. Then come to the notes. Other payables 800, no need to take the total. Carrying amount of right of use asset 2400 minus 240, 2160. No other receivables. But we made the provision, right? When we write the format lamai, we made the provision for other receivable. If there are items, we can include, otherwise skip it. That's how to write the format, right? And then we can complete the PP table. Equipment closing balance 1600, motor vehicles 4500. Accumulated depreciation, we don't depreciate lands, so the carrying amount is also 5000. And we can cut these two together, and remaining is 210. So carrying amount is 2400 minus 210, 2190. If I'm mistaken, please let me know. Here 10, 810. So 1600 minus 810, we get 790. Here 5, 2, 11. Therefore, carrying amount is 3375. Right? And I'll erase this part just to write the total. And total carrying amount is summation of this 5000 plus 2190 plus 790 plus 3375. It's 11,355. Are these two totals correct? Can anyone confirm? Okay. Are these totals correct, Lamai? Yes, great. Now take these totals to the SOFP. Let me take them. Sorry, SOFP. PPE, right of use asset 2160. We had other payables. This is not number 5, this is not number 6. Other receivable 7, other payables 8, right? Other payables 800. PPE 11,355. Okay. Now we have taken all the, we have more. Income tax expense 475. Other income 130. Revenue summation. Take the summation 8,850. Isn't it? 50, yes. Total revenue. Now you know the composition of the total revenue. If you get an adjustment like this for the examination, now you are confident enough, right? 8,850. So take them to the income statement. Revenue 8,850, other income 130, income tax expense 475. Tax expense 475. Now we can balance the question, right? Gross profit 0, 1, 3, 8. Total of expenses 1,120, 775, 310 plus 460. I get 2,665. Then profit before tax, gross profit is 8,310 plus 130 other income minus total expenses 2,665. I get 5,775. Minus tax expense 475. I get 5,300 as the profit for the period. And here net effect is 300 minus. So exactly profit for the period, sorry, TCI 5,000. I don't have enough space, 5,000. Right, 5,000. Now take total comprehensive income to the changes in equity statement, but profit for the period 5,300 should be added to the retained earnings, and whatever you write under OCI should come to the revaluation reserve. Now here minus 300. So minus 300 should come here. Now you take the closing balances. Ordinary share capital 1,700, here 500, here how much? 7,020. Now check my answers. Right? Are my answers correct? Great. So we'll take these answers to the statement of financial position. Remember, even though these answers are incorrect, right? If you take these received answers to the SOFP, you get marks. Right? Even though your profit total comprehensive income is incorrect, if you write it in a proper way with the name, you get 1 mark. That's why I told you it's matter of completing the question, right? If you do adjustments to a certain level and if you complete the question, you will get marks. So I'm taking them to the SOFP. Stated capital, it was 1,700. Revaluation reserve 500. Retained earnings 7,020. So total equity 1,700, 500, 7,020. I get 9,220. Total non-current asset 5, 11, 5, 3, 1. Total current asset 595, 1,080, 420, 2,095. So total asset 0, 11, 6, 15,610. Non-current liabilities 40, 5, 2. Current liabilities 1,420, 800, 660, 600, 240, 130, 3,850. So total equity and liability, equity 9,220, non-current liabilities 2,540, current liability we get 15,600 exactly equal. Got it? Right, you might forget to fill the note number 3 in this case, right? Profit before tax, because without this note, you get the SOFP balanced, right? So here you have disclosed the material information, like relevant information for decision making. One is depreciation. You get 2 marks. Last time we got 1 mark for this note, but normally you get 2 marks, right? It doesn't matter if your answers are incorrect. The received answers can be written here. You get 2 marks, right? So at least 4 items should be written. Normally we get 2 marks, 2 items, 1 mark. 1 mark for 2 items. Therefore, you have to write at least 4. But my advice is write 5 items, because if any item that you have written is not considered for marking, then you lose 1 mark, right? Therefore, write 5 or 6 items. Depreciation, when you write depreciation, write as a single line, total depreciation. So depreciation, as I remember here, 210, 160, 675. 210, 160, 675. As well as right of use depreciation, it's 240. So one figure, right? One figure. Actually, last time, as I remember, right of use depreciation was considered as a separate item. But if you write like this, you get the advantage, because you write this as a single item. When the markers or examiners consider these as 2 items, you get the advantage, right? And then in the expenditure table, I'll circle. Now this is disclosed, this is disclosed, this is disclosed, and this 270 disclosed. Impairment loss we have to disclose. Warranty expense disclose. Shall I write it here, or else? And then write off donation, building revaluation deficit, lease interest, unit disclose. At least 4 items should be written, but my advice is to write at least 5. So we wrote the depreciation, impairment loss, warranty expense, 120, 130. Impairment loss 120, warranty expense 130, and then we had write-off 15, donation we had 110, lease interest we had how much? 200, and even revaluation deficit 185. 200, revaluation deficit 185. Okay, Lamai. So if I take 1, 2 questions, you have to see the workings. This one. Yes, I can. I'll show one. I'll show each screen for a while. And Lamai, tomorrow also we are having the session, but tomorrow timing may be little different. Lamai, I have a session in the evening, so shall we start at 6:30? Is it okay? Tomorrow? Original time was 5 p.m., but shall we start at 6:30? Okay, tomorrow also we are having a session, right? So please bring the questions. Revenue adjustment, Uduwana. Now I included one adjustment from the SLFR 15 revenue standard. So there are two types of revenue: sale of goods and providing services. Now they had received the advance of 300 for a service to be supplied in March. They had supplied the service, provided the service in March as agreed at a total consideration of 550. And 300 had been received as an advance. So the remaining balance 250 was received in cash, but it has been recorded as a cash sale, right? So what did we do? We first recognized the service revenue. Service revenue credit 550 total consideration, trade receivables debit 550, right? And then remaining 250 was considered as a cash sale. Actually, it is a receipt from the debtor. Therefore, cash account is debited, that is correct, but it is included in the sales account, it is incorrect. So sales account debit, trade receivables credit. And then we had received the advance of 300, it is in the unearned service revenue account. So we removed that unearned service revenue of 300 from that account and transferred that to the trade receivables. Okay. I'll show the answer one by one. This is the first one. Check your answers. Next page. Next one, this is actually a working. And last working. All right. So with that, we will finish the today's session and hoping to see you all tomorrow as well. But timing is a little different. We will be meeting at 6:30, right? So please bring questions. I'll be sending another question. I think I can send another question. And also there are some questions from management accounting, the second compulsory question. Do it. I'll do those questions tomorrow, right? Okay then. Hope to see you tomorrow. Till then, bye and good night.
Thank you, sir. Wow, what an insightful evening it has been. On behalf of PPIM, I would like to thank Mr. Chathuranga Sandaruwan sir and Mr. Rakita Jayatunga sir for sharing their time, knowledge and guidance with us. And of course, a big thank you to all of you for joining and staying so engaged throughout the session. Before we wrap up, tomorrow's session will begin at 6:30 p.m. on the tutor's request. So please make sure to join on time. We wish you all the very best for your A-level exams. Keep learning, stay confident, and never stop pushing towards your goals. Thank you, everyone, and have a wonderful evening.
Good evening, everyone. On behalf of PPIM, good evening, everyone. On behalf of PPIM, I'm absolutely delighted to welcome each and every one of you to the A-Level Grand Seminar Series. I'm Faliha and I'll be your host for this exciting session. At PPIM, we are proud to be one of Sri Lanka's leading ACCA institutes with a growing international presence and a mission to help students reach new heights of success. This seminar is a part of PPIM's CSR initiative designed to empower A-level students like you with real insights, exam strategies, and a clear understanding of your future pathways, not just for your exams, but for your career in accounting and finance. We are honored to have with us today Mr. Mohammad Nazil Rasuldin, our special guest speaker. Mr. Nazil is a chartered accountant with over 17 years of experience in financial and strategic advisory. He holds an impressive list of qualifications such as ACCA UK, FCA Sri Lanka, ACM Sri Lanka, ACPM Sri Lanka, and FMAAT Sri Lanka. He is an expert in financial transformation and compliance, and what truly sets him apart is his ability to simplify complex financial concepts and make them engaging for all audiences. We're thrilled to have him with us today to share his experience, insights into global opportunities through ACCA. Over to you, sir.
Hello, can you hear me, guys? Am I audible? Yes. Can you hear me, guys? Guys, can you hear me? Yeah. Sorry, guys. Right. Okay. So thank you very much for your warm welcome. Right, and it's a pleasure to join you guys virtually today. Right. So basically, my name is Nazil. I'm working as an accountant in the GCC region for around 3 years. Right. And it's very much I'm very much honored to be part of as a speaker for you for the day. And it's very much I'm very much proud also that I'm talking to people who are future finance leaders of Sri Lanka, right? So the topic, what I was thinking about today is to talk about how ACCA will equip you with the global transformation and financial dynamics and to provide some kind of opportunities in global region, right? So that is what the topic. So I will not take much time. Rather, I will just cut short my speech into around 5 to 10 minutes. Then I'll try to give you the enough and more kind of an idea to talk about the ACCA, right? So first and foremost, right? So you need to understand the financial reporting, the finance speed of finance has changed dramatically over the period. So we just don't go behind numbers like preparing accounts. Rather, accounting is now more into strategy, technology, and providing leadership to companies. Right. So now we become a business leader rather than just keeping the books or recording financial statements. But because we are working in a dynamic environment, and our work is related to strategy, and we use more toward data analysis, cloud computing, and so on and so forth things, right? So therefore, the landscape of financial reporting or financial accounting has faced a lot of changes, right? So then we are into more into strategy and leadership skills. So when you are embarking into any qualification or anything, you need to think about how the qualification and value for you to answer into real life business challenges and situations. That's not the most important thing professional qualification should provide, because why day to day you will not face the same thing. You need to have a diverse kind of an concepts right in your curriculum or studying materials, so that will add value for you to face real life challenges, right? So therefore, taking a qualification like ACCA will definitely provide a competitive advantage where the questions are more into business life situations and syllabus are changed dramatically to answer the high demand, right? For example, in ACCA, they are bringing into data science and data analytics related subjects, which are very important thing for you to understand in the future concept, right? So after talking about the changing landscape of finance, right? I want to just touch on artificial intelligence, right? So there is always a question, AI will replace accountants, right? So AI will not replace accountants, rather AI will empower us. So nowadays, global, normal day-to-day operations, right, where that can be a repetitive task like invoice processing, fraud detections, where there is a huge amount of data, is already done through robotics or generative AIs, right? So we call it as business process automation. But now the information and the wisdom what we get from data and understanding will provide a lot of things to make a strategic decisions. Now companies go beyond countries and embark into different ideas, strategies, and so on and so forth, right? So I think something like an AI related or might be a data related or might be strategy related things could always give you a competitive advantage. Where ACCA plays a very pivotal role in giving that kind of a mindset and that kind of a technical driven environment for you to understand those kind of a situation in a real business situation. So after talking about the landscape changes and the technological developments, I would like to explain you some of the opportunities which you might have in global region, because ACCA is a passport for global. ACCA is a passport for every student, right? It's like a global qualification. But if you talk about like thinking into like Middle East or GCC region, there is a huge amount of demand for ACCA qualified people, because ACCA Institute itself embarked into a lot of programs, a lot of awareness, right, in relation to this Middle East sector. Right. Recently, when I was attending a seminar with Deloitte, also the the economies in this GCC region is growing very much high in rates rather than compared to other regions. Because, for example, if you take about Saudi, they're having their Vision 2030. Qatar has their Vision 2030, and on top of it, the countries are some countries are bidding into Olympics committee, Olympics games, Asian games, and so on and so forth. There is a huge potential growth for this kind of consumption in these countries. Because of this consumption, there is always a business evolving in this area. So there is always a demand for a professional qualified accountant like an ACCA who might have a diverse idea, right? If you understand about a situation like DCC, right, you are not only talking about accounting requirement, you are talking about tax advisory, mergers and acquisition, data analytics, might be regulatory reporting. Not only that, you are more into compliance like central bank and so on and so forth. So the dynamics, the demand for the accountant has evolved with the usage of AI as well. But the demand is still growing, because right, the economy in these areas or segments of the continents, right, is going up, right? And there are a lot of tax reforms happening in these kind of a countries. So there is always a demand for internal auditors and tax consultants to come up with, where ACCA plays a pivot role, right? Because ACCA taxes are more in line with the global requirements as well. So you will study transfer pricing, OECD principles, right? Which will be always an advantage when you come to countries like Middle East, right? So that is the competitive advantage. As I have done my taxes in that kind of an area, when I move into countries like this, it is easy for me to adapt to those requirements and just to report the taxes on that. Right. So after talking about the changes in the industry and talking about the demands for professional accountants, why you need to embark into ACCA? So ACCA is a globally recognized qualification. You have more than 180 countries, right? And the options in ACCA is that it is easy for you and it's very flexible. While you're working, while you're studying, or whatever the other qualification you do, you have the flexibility of learning. And the qualification is more toward a practically focused area where the questions at a strategic level as I was a part of a faculty with PPIM in the past, right? So when the questions are more into a business scenario, business case, right? So therefore, you are going to learn and apply real life situations, even in the examination, which will be what imitated in your real life. And we always have a value because by our solid ethical foundation is there. That's not in Middle East, right? If you're saying ACCA, they have a recognition also. So a lot of high level profile people are having ACCA as well. So there is a emerging demand for the ACCA qualification as well. So not only ACCA gives you a professional qualification, ACCA has some kind of a relationship with London universities as well. So you may be able to equip with your bachelor's degrees and master's degrees with those qualifications while you are having your ACCA. So adding a professional plus a degree qualification will accelerate your career growth, and it will give you a competitive advantage, a huge amount of value in the global market as well. So, as my final thought, right, to all of you today, right? So, the financial market or finance industry or financial reporting is changing very fast, right? There are a lot of new technology comes up with AI, generative AI, and so on and so forth, right? So, as a student, right, it is very much good you understand with curiosity all the new things comes up with and embrace your technology and think globally. That is the most important thing. That is what your ACCA qualification works on it. So ACCA qualification works like a lot dynamic. Sorry, guys, right? ACCA launchpad for a dynamic and international career for you, right? So that gives you that open up a lot of opportunities for you, right? So it's a short time, guys. I had a chat with you, right? So I hope I have given you some kind of a background and interesting factors about the changes in the industry and the demands, what kind of a demand we expect, and how ACCA will add value for you. So I take this time to thank APPIM for inviting me and share some of my experience, and wish you all you guys success in your journey ahead. Thank you very much, guys.
Thank you so much, sir, for that inspiring and insightful session. I'm sure everyone now has a clearer vision of the exciting career possibilities that await them with SCCA. Next, we continue with our seminar with Mr. Chathuranga Sandaruwan, Senior Lecturer at the University of Sri Jayewardenepura, Department of Accounting, Faculty of Management Studies and Commerce. Mr. Sandaruwan holds an MBA from the Postgraduate Institute of Management, a BSc in Accounting, and is both ACCA and ACA qualified. With his incredible academic background and years of teaching experience, he has guided countless students to achieve both academic excellence and professional recognition. Now, without further delay, let's welcome our lecturer, Mr. Chathuranga Sandaruwan.
Right. Good evening, everyone. I hope that I am audible to you all. So today we are going to discuss the second part of the tutorial which was given yesterday. We started the session yesterday and we completed the company accounting question. Actually, it was not just the company accounting question, but I discussed a lot of important points, right, which will be important for the upcoming examination. So today we can get into the question number 2 of that tutorial, and after that we can get into the today's tutorial, right? I hope that you have the tutorial. So let me share the screen. I have taken the second question from the management accounting. You know, the second question is devoted for the management accounting and it is a compulsory question. Part A, Nirmal Traders was started on 1st March 2025. Now, this is a newly started company. Therefore, no beginning balances. Remember, always beginning balances are the ending balances of previous period. Right? Now, this has been started on 1st March 2025. And the following are details of salaries and wages for the first month of its operations, that is March 2025. So we have 3 employees, Jayantha, Sunil, Menaka, basic salary, staff loans given, special allowance, overtime. Deductions, salary advance, welfare contribution, bank loan installment. Other information, employees are entitled to obtain 10%. You can't see the board. Oh, I can't see the board now. Right. Employees are entitled to obtain 10% salary advance at the beginning of the month, and the salary advances will be deducted when salaries are paid. Jayant and Sunil have obtained salary advance during the month. The business started giving staff loans on 1st March 2025. Accordingly, all employees obtain loans on this date. Staff loans should be deducted from the employees over 10 months starting from the month of granting the loan. Okay. And then EPF and ETF contributions, you know that employees contribution is 8% and employers contribution is 12% if you are going with the normal rates. But if you are going with the special rates, employees contribution is 10%, employers contribution is 15%, ETF 3%. The monthly salary will be paid on the 25th of the month. Contributions for EPF and ETF are calculated based on the gross salary except overtime payment and will be paid before the 15th day of the following month. On 25th March 2025, rupees 1,200 was used from the welfare fund to purchase some foods for a meeting held in the welfare society. The requirements, the salary sheet for March 2025, the following account for the month, salary expense, salary control, EPF payable, welfare fund. And then calculate the total labor cost incurred by the business for March 2025. So let's prepare the salary sheet. You know the format, and when you prepare it, plan it. So how many earnings? We have basic salary, and remember staff loans given is not an earning. Right? Staff loans are not earnings. They are the loans given, right? And special allowance, another earning, overtime, the third earning. So here we see 3 earnings. Number of deductions, salary advance, welfare contribution, bank loan installments, and then we have salary advance deductions that's taken, salary advance, welfare contribution, bank loan installments, staff loan deductions, and EPF. 5 deductions, is it? 5 deductions. 3 earnings and 5 deductions, if I'm not mistaken. So let's have the format. Question 2, part 1, salary sheet. Or we can say this as payroll, right? Let's have a format like this. Name of the employee, and then earnings. Under that, we have basic salary, and then we have special allowance, and then we have OT, then gross salary. Then we have to have deductions. Under that, we have EPF deduction, that is EPF 8%. In addition to that, salary advance, and then welfare, then bank loan deduction, then staff loans, then total deductions. Then net salary, then EPF 12% employer's contribution, and ETF 3% contribution. So you plan it and then have the format. All right. You request the yesterday's recording from the PPIM, you will get it. All right, let's start. Now, there are 3 employees, Jayantha, Sunil and Menaka. You will write them. Jayantha, then Sunil and Menaka. Right? The basic salary is 80,000, 60,000, 50,000. 80,000, 60, 50, 60,000, 50,000. Special allowance 10,000, 8,000, 5,000. 10,000, 8,000, 5,000. And remember, staff loans are not earnings, right? Then overtime 7,500, 4,000. And then 12,000. Then we can calculate the gross salary. What is gross salary? Basic salary plus all other allowances. Right? Basic salary plus all other allowances are gross salary. So here 97,500. Here 72,000. Here 67,000. If I am mistaken, please let me know and do calculations with me. And EPF 8%. Now they say EPF and ETF and even ETF are calculated based on the gross salary, but except overtime. That's the normal way to calculate EPF and ETF, right? Gross salary except OT. So except OT, gross salary is 80,000 plus 10,000, 90,000. So 90,000 into 8%. I get 7,200. At the same time, you can complete the 12% and 3% because the basis is same, right? So 90,000 into 12%, 10,800. And 3%. It's 2,700. Right? And the salary is 68,040. And that into 12%, 8,160. That into 3%, 2,040. Right? And then Menaka, the last employee, 55,000. 55,000 into 8%, I get 4,400. 12%, 6,600. 3%, 1,650. I hope my answers are correct. You have to be very efficient when you are using the calculator, right? Take them quickly. And then salary advances are given at the beginning of the month. And they are deducted at the end of the month. Actually, there is a mistake in the question. No, don't worry about it because salary deductions are given, salary advances are given. Here, see, salary advances are given. Therefore, don't worry about this 10% thing, right? Because this is the maximum limit, but they have taken 5,000 and 10,000, simple, right? Jayant and Sunil. So deduct 5,000 and 10,000. 5,000 and 10,000. Menaka hasn't taken salary advance. Then welfare contributions, 500 each employee. 500, 500, 500. Bank loan deductions, 24,000 and 12,000. 24,000. Last one, 12,000. Staff loan, you can see the staff loans given 50,000, 40,000, 30,000. They say staff loans are recovered over 10 months starting from the month of granting the loan. Now this is the first month of the operation. So granting month is March 2025. So we have to deduct 1/10 of the loan, right? So loan balance is 50,000, 1/10 is divide by 10, 5,000. Sunil, 4,000. Menaka, 3,000. 5,000, 4,000, 3,000. 5,000, 4,000, 3,000. Simple question. Okay. Then take the total deductions. 7,200, 5,000, 500, 24,000, 5,000. It's 41,700. And here 5,440, 10,000, 500, 4,000. 19,940. And then the last one, 4,400, 500, 12,000, 3,000. It's 19,900. Then net salary, simple, gross salary minus total deductions. 97,500 minus 41,700. I get 55,800. 72,000 gross salary minus 19,940. Net salary is 52,060. And then 67,000 gross salary minus 19,900 total deductions, 47,100. Can anyone check my answer and let me know whether it is correct or wrong? As I told you, you have to be very efficient using the calculator. And you know that you can save some time from this question, right? From the management accounting question, you can save some time. That saved time can be utilized for the company accounting, like 5 minutes, 10 minutes. So you have to be very efficient. Can anyone confirm whether my calculations are correct? And if you have done, you can get the totals. And getting the totals is a must. Staff loan deduction I took. Staff loans are not earnings, but staff loans are recovered over 10 months, starting from the month of granting. So you divide the staff loan balance by 10. 50,000 divided by 10, 5,000 should be deducted from this month. 40,000 divided by 10, you get 4,000, right? And 30,000 divided by 10, you get 3,000. So that they are the loan recoveries, right? Loan recoveries. Are my calculations correct? Is my screen small? Is it still small? Why is my I didn't do anything abnormally. Is it common to others as well? Is my screen small? Yes, Lamai? Others, please? No. So you check it from your end. I think you have to double click. Then you will get the maximized screen. Great. Right. So I'll take the totals and let me know whether the totals are correct. 80, 140, 190,000. 18,000, 23,000. 16,000, 23,500. Gross salary 97,500, 72,000, 67,000. I get 236,500. And EPF 7,200, 5,440, 4,400. It's 17,040. Here 15,000. Here 1,500. Here 36,000. Staff loan deductions 9,000, 12,000. Total deductions 41,700 plus 19,940 plus 19,900. It's 81,540 if I am not mistaken. So net salary, you can get the summation of this. So total gross salary minus total deductions, right? If I take total gross salary minus total deductions, I get 154,960. And EPF 12%, 10,800, 8,160, 6,600. It's 25,560. And 3%, 2,700, 2,040, 1,650, 6,390. Check my answer and let me know whether it is correct or wrong. Because if I prepare ledger accounts, if there is an error, it affects to the ledger accounts as well. Can anyone confirm whether these totals correct? Great. So if you have finished, you can prepare the required accounts. We need salary expense account. Let me prepare them here itself because we have the figures, right? So you have to have salary expense account. And then salary control account. And then EPF payable account. Lastly, welfare fund account. Have these accounts. All right. So how do we account for these totals, Lamai? We can straight away go to the gross salary. So gross salary 236,500. The double entry is salary expense account debit 236,500. Salary control account credit. Salary control account credit 236,500 came from the salary account. Right? So straight away you can go to the gross salary. And then for each deduction we have to record, and remember each deduction is debited to the salary control account. Right? Each deduction is debited to the salary control account. So EPF deduction 17,040 salary control account debit and relevant account credit. Now EPF payable account credit. EPF payable. EPF payable account credit 17,040. Salary control. And remember, if you are required to prepare the ledger accounts, Lama, you have to write the descriptions correctly. Right? If you don't write the description, you may lose some marks. Last time also that happened for the required accounts. But if you prepare account for the work-ins, not such descriptions are required. But if it is a requirement, now in this case, we have to prepare these 4 accounts. So when we prepare, the descriptions are important. Remember. Then next deduction is salary advance, salary control account debit, salary advance account credit. Then welfare fund, salary control account debit 1,500, welfare fund account credit. It is a requirement, welfare fund account credit 1,500, salary control. Okay, salary control account debit, welfare fund account credit. And then bank loan 36,000, loan installment payable, bank loan installment payable credit. And then staff loan 12,000, staff loan account credit, staff loan account credit. And they say the net salary is paid on 25th of that month. Therefore, net salary is 154,960. So when it is paid, cash account credit, salary control account debit, 154,960. Then if you pay the salary, this will be balanced. So it will be balanced to 236,500. 236,500. And remember, if you pay the salary within the month itself, there is no balance in the salary control account. But if you don't pay the salary within the month, there is a payable balance, which is carried down from the debit side. Okay, brought forth from the credit side. And then EPF payable. Now, EPF employers contribution 12%. On one hand, it is an expense, right? On the other hand, it is payable to the government. Now, EPF remittances are made in the next month, before 15th of the next month, right? Normally, it is paid at the last moment, last day, right? Or last day, or couple of days before the last day, right? So 12% contribution, 25,560. EPF expense debit, EPF payable credit, 25,560. EPF expense. Now we can record the last transaction. They say using the welfare fund, they have spent 1,200 to purchase some foods for a meeting held in the welfare society. So when this welfare fund is used, Lamai, cash account credit, welfare fund account debit. When this fund is used, cash account credit, welfare fund account debit, right? So welfare fund account debit 1,200 cash. Cash account credit, welfare fund account debit. And remember, when you are required to prepare ledger accounts, you have to take at least the carried down balance, right? At least the carried down balance. And also for income and expenses accounts, you have to transfer them to the profit or loss account. Okay, for example, salary expense account is an expense account. So that should be transferred to the profit or loss account, 236,500. Right? Don't transfer that to the income statement, transfer it to the profit or loss. And this doesn't have a balance because we paid the salary itself, salary in the month itself. EPF payable, it's a liability account, so the balance is 17,040 plus 25,560, it's 42,600. So carried down because it is paid in the next month, 42,600. And welfare fund, it's a liability account. So we had 1,500, but we utilized 1,200. So carried down balance is 300. How did you get 1,200 cash in the welfare fund? If you read the question, there is one adjustment. They say they spent 1,200 to purchase some foods for a meeting held in the welfare society. Now using this welfare fund, they have utilized 1,200. So when the fund is used, cash account credit, welfare fund account debit. Right? All right. And the last question, calculate the total labor cost incurred by the business for March. Total labor cost is lamai, gross salary, this one, plus EPF expense 25,560 plus ETF expense 6,390. So if I write the answer for the third part, as I don't have enough space, gross salary 236,500, EPF expense 25,560 plus ETF expense 6,390. So total expense incurred by the business on behalf of employees 236,500 plus 25,560 plus 6,390. The answer is 268,450. What is the seventh adjustment? Is it EPF and ETF? Now, Lamai, they say EPF and ETF are calculated based on the gross salary except OT. So, except OT, you take the salary 80,000 plus 10,000, 90,000, 90,000 into 8%, right? 68,000 into 8%, 55,000 into 8%. Got it? Okay, now this is the answer. If you have finished, we can get into the part B. right? So let's get into the part B. The following information is provided with regard to the material X101, which is used in the manufacturing of goods in a business. As at 31st March 2024, there was a balance of 300 units and the weighted average cost per unit was 800. Purchases and issues of the material X101 in April 2024 were as follows. Date, purchase, total purchase cost. Date and issues in units. The 50 units of materials issued on 15th April 2024 were returned by the factory to the store on 17th April 2024. When issuing materials, the weighted average cost method is used to price them. Requirements, cost of the material inventory as at 30th April 2024, weighted average cost per unit of material inventory as at 30th April 2024, the cost of the materials issued during the month. Okay, so let's prepare a store ledger. Part B is store ledger. Then you will get all the answers. We have to have the date, receipts, under that quantity, price, cost, or you can say value. Then issues, quantity. For price, keep some space. For price, keep some space. And then value or the cost. Then balance. Actually, two columns are required. Balance, quantity, and the value or cost. We don't want this part. Have this format. right? So let's start. Now at the beginning, we have 300 units. So that's the beginning balance first, sorry. 1st April, beginning balance is 300 units. Weighted average cost per unit is 800. So 300 into 800, I get 240,000. And then you take the chronological order, date order, right, based on the date of occurrence of the transaction. The first transaction is 1st April purchase. 1st April purchase of 400, and the total cost is given. So this figure is given, 320,000 is given. So you can find the unit price. How? This divided by this. 320,000 divided by 400, unit price is 800. Right? So balance goes up, 300 plus 400, 700. Cost is 560,000. Okay. And then after 1st of April, we have an issue on 5th April. We have issued 500. So it is an issue. And how do we take the weighted average cost? You take the total cost prior to the issue, this 560,000. Total cost prior to the issue, divide that by total quantity prior to the issue. Okay, total cost 560,000 divided by the total quantity 700. 560,000 divided by 700, it's 800. So this is the weighted average cost. This into the issued quantity, we get 400,000 is in 800 into 500. 560,000 minus 400,000, 160,000. That's why I asked you to keep some more space for the price under issues for this calculation, right? And then after the 5th of April, there is a purchase on 10th of April. 10th of April, again we have purchased 400 at the total cost of 332,000. 332,000. So 332,000 divided by 400, I get 830 unit price. Right? So it is a purchase, balance goes up, 300 plus 400, 600. 332,000 plus 160,000, it's 492,000. Then after 10th of April, we have 15th of April issue. 15th of April issue of 380. Now the total cost prior to the issue is 492,000. And divide that by the total quantity prior to the issue, 600. 492,000 divided by 600, we get 820 weighted average price. That multiplied by 380, we get 311,600. So balance comes down, 600 minus 380, 220. 492,000 minus 311,600, I get 180,400. Okay. I told you EPF and ETF adjustment lamai, you have to have the continuous, presence. Otherwise, it will be the waste of the time. Now EPF, ETF are calculated in that question based on the gross salary except EPF. Sorry, except OT. Read the question carefully, right? That's the correct way of calculating EPF and ETF. All right. Then they say one adjustment, 50 units of materials issued on 15th April 2024 were returned by the factory to the store on 17th April. Now after 15th of April, there is no transaction before 17th. So we have to take that 17th transaction, 17th of April, right? So we have issued 380, of that 50 units have been returned by the factory. You can take it as a reduction of the issue, here reduction, or else you can take it as a receipt, either one, reduction of issue or receipt. I'll take it as a receipt because we have received it from the factory. It's 50. And you have to take the issued price, right? Issued price is 820. 50 into 820, it's 41,000. So again, quantity goes up 270, 41,000 plus 180,400, 221,400. Okay, take it as a receipt. And then after 17th April, we have 20th purchase. 20th April purchase, another 400. Purchase price is, or the cost is 340,000. So if you divide 340,000 by 400, unit price is 850 this time, right? So quantity goes up 270 plus 400, 670. 340,000 plus 221,400, 561,400. And lastly, 28th of April, do it very fast. We have issued 450. Issue 450. So total cost prior to the issue is 561,400. Divide that by total quantity prior to the issue 670. 561,400 divided by 670. I get 837.91. Use 2 decimal points, right? 2 decimal points. Then 450 into 837.91. It's 377,000. Let's say 60 approximately. I get 59.5. I rounded it to 60. So 670 minus 450, we get 220. Correct? And then cost is 561,400 minus 377,060, 184,340. Now we can answer the questions. The cost of material inventory as at 30th April, this is the answer. First part answer is 184,340. Part 2, weighted average cost per unit of inventory in stock, material inventory stock, unit price. So total cost is 184,340. That consists of 220 units. So weighted average cost is divided by 220. It's 837.9. Part 3, cost of the materials issued during the month. So that's the total of this. The cost of the material issued. 400,000, 311,600, 377,060. Here the total is 377,060. But remember, although we issued this much, they returned this much. Okay, be careful. Therefore, this minus this, right? So answer is 377,060 minus 41,000. Sorry, this total is incorrect. Total should be more than that. Total is 400,000, 311,600, 377,060. It's 1,088,660, right? Take the total. 1,088,660 minus 41,000. So answer is 1,047,660. These are the answers. If you have questions, you can ask. Right. So let's get into last part. Which is overhead costing. What does it say? Yamuna company manufactures and sells a variety of tables, estimated cost and other information per year in various departments of the institute are given below. So they have production and painting divisions, which are manufacturing divisions, and the store, which is a service division. Direct material wood, rupees 200 for foot of timber or wood, 400,000. Direct material paints, 300 per liter. In the painting department, 60,000. Direct labor, 250 per hour, 100,000, 125,000. And indirect materials, indirect labor, machine hours. Estimated other overhead costs per year: employee welfare expenses 50,000, machine depreciation 600,000, electricity, water and telephone 120,000. Other information, number of employees, the cost of machines, floor area. The store department provides service to the production and painting departments in the ratio of 75% and 25% respectively. Overhead cost of production and painting departments are absorbed to the product based on machine hours and direct labor hours respectively, the absorption basis. The business produces a type of chair called XE101 and the following information is provided to make of one type of chair. 5 hours of machining from the production department and 30 feet of wood required. The painting department requires 5 hours of direct labor hours and 4 liters of paint. Right. Overhead cost analysis sheet. Calculate the overhead absorption rate for each manufacturing department and calculate the cost of production of a 101 type chair. Right. Let's prepare the format. Part C. Overhead cost analysis sheet. Overhead cost item and then basis cost, 2 production divisions, 1 service division. Cost item, basis, cost, production divisions, which is production and painting, and then store, which is a service division. They have this format. Okay. So we can take the items and remember, don't take direct cost, take the manufacturing overheads only. So first item is indirect materials. Indirect materials. Basis is direct because directly we know how much is for the production, how much is for the painting, and also for the store. 31,000, 37,000, 2,000. 31,000, 37,000, and 2,000. So total is 68, 70,000, isn't it? 31, 37, 2. Yes. And then indirect labor. Again direct because we know it directly. 20, 60, 30. 20,000, 60,000, 30,000. So it's yeah, 80, 100, 10,000. And then we can take common overheads, employee welfare. The absorption basis, I mean the allocation basis is number of employees. Number of employees. Right? So the cost is 50,000. You can calculate a ratio, total number of employees. You can see 21, 27 and 2. Right? So take the total number of employees, 21 plus 27 plus 2, it's 50. So if you take a ratio, 50,000 cost is divided by 50, you get 1,000 per employee, isn't it? 1,000 per employee. This is a mathematical distribution, right? Based on number of employees. So 1,000 per employee. Here we have 21 employees in the production division. So 21,000. In the painting division, we have 27 employees. 27 into 1,000, 27,000. Here we have 2 employees, 2,000. Mathematical distribution, right? And then we have machine depreciation. Machine depreciation. Normally we depreciate the machinery based on the cost. So the absorption or the allocation basis is cost of machinery. Cost of machinery. The cost is 600,000. Depreciation is 600,000. And if you take the cost of machinery total cost of machinery in thousands, 4,000, 1,500, 500. It's 6,000, right? So if you divide 600,000 total machine depreciation by 6,000 total cost in thousands, you get 100 per 1,000, right? 100 per 1,000. I think I am correct, right? 600,000 divided by total cost is 6,000, yes. Then 100 multiplied by 4,000, I get 400,000 here. Then 100,000 multiplied by 1,500, 150,000. 100 multiplied by 500, 50,000. All right. And then last one, electricity, water and telephone. Electricity, water and telephone. We have to take the floor area. And remember to write the description of the basis. Don't write numbers, right? Floor area. Cost is 120,000. And if you take the total floor area, 1,000, 1,400, it is 2,400. 120,000 divided by 2,400 total floor area. 120,000 divided by 2,400, it's 50 per square foot. 120,000 divided by 2,400. So 50 into 1,000, 50,000. Again 50 into 1,000, 50,000. And 50 into 400, 20,000, isn't it? Now you can take the cost of each column. So total cost 70,000, 110,000, 50,000, 600,000, 120,000. I get 950,000. Get them quickly, Lamai, because you want to save the time. Okay. And then production division 31,000, 20,000, 21,000, 400,000, 50,000. I get 522,000. Here 37,000, 60,000, 27,000, 150,000, 50,000. I get 324,000. I hope my answers are correct. And store 2,000, 30,000, again 2,000, 50,000, 20,000, 104,000. Now this is up to the primary apportionment. No, don't write the ratio. That's what I told you. You have to write the name of the basis. And I don't know about the recording. That you have to ask from the organizers. In the previous question, returned quantity 50, it was issued on 15th, right? So it was issued at 820. So take that price. 50 units were returned from the factory. So it is a receipt to the store. Receipt 50, unit price is 820 because it was issued at 820. So take it as the unit price in the cost. Okay. Okay. Then we have to redistribute the cost of the service department. So deduct 104,000 from that department and it should be redistributed. Write it here, store. So the ratio is given 75% to 25%. So 104,000 into 75%. There actually you don't have a description for the basis. In that case, you can write 75% to 25%. Right? So 75% of 104,000 is 78,000. And 25,000 of 104,000 is 26,000. And no impact on the total cost because this was deducted and redistributed to the other departments. So again, take the totals. Here 950,000. Here 0, 0, 0, 0, 0, 600,000. Here 350,000, if I am not mistaken. Here no balance. Now you can calculate the overhead absorption rate for each production department, that is production and painting. Okay. So let's calculate the second requirement. Let me erase this part. Second requirement, overhead absorption rate, right? Production department, budgeted overhead of production department is 600,000 and divide that by the absorption basis is, they say, machine hours. So total machine hours of that department is 1,500. Divide this by 1,500. Then 600,000 divide by 1,500. I get 400 rupees per machine hour. And please interpret it. Then you don't get it wrong. Right? Please interpret it. Is it okay to write both bases? Yes, you can, but it will take some time. If you want, you can write. All right. is always get favorable numbers like 2000, 2500, 5000 for product production cost. Basically, yes. Anyway, don't worry about this number. Overhead absorption rate will be like this, like 450, 400, like the whole numbers. Okay. And then overhead absorption rate of the painting division, budgeted overhead is 350,000. The absorption basis is direct labor hours. So you have to calculate the direct labor hours. Now you look at this. They say direct labor hour 250 per hour. Right? 250 per hour. So total cost is 125,000. So you can find the number of hours. How? 125,000 divided by rate per hour. Then you get number of hours. 125,000 divided by 250. Got it? So here 125,000 divided by 250. It's 500. Right? Therefore, 350,000 divided by 500, we get 700 rupees per direct labor hour. That's the answer for the second part. All right. Then we can get into the third part. I'll take, shall I use the same space? Third part. We want to calculate the unit cost, right? So they say to produce one chair, it requires 5 hours of machining from the production department and 30 feet of wood, right? So we can take wood cost 200 per foot, that into 30 feet. So wood cost 200 per wood foot, that into 30 feet of wood. It's 6,000 wood cost. And then paint, both are direct materials. You can see painting department, 4 liters of paint. See, 4 liters of paint. Price per liter 300. See, therefore paint we require 4 liters. Price per liter is 300. Then it is 1,200. That is direct material. And then direct labor cost. Direct labor cost. So this is a bit difficult. You have to think. If you got decimals, means wrong. Yeah, basically like if you get like 35.5, that will be correct. But like many decimals, most of the case your answer is or maybe incorrect, wrong. Right? Like it can be 37.5 or 40.5. That can be, but to get a lot of decimals, probably answer is wrong. Please check it once again. Then direct labor cost lamai. So we have to incur direct labor cost from both department. production and painting, right? So we know the labor cost per unit is 250. Here also 250. Now they say 5 hours of machining department. No, they say 5 hours of machining and 5 hours of direct labor hours. Now here you have to take 5 hours from the painting department. They are not giving us the direct labor hours from production department, right? So we'll take 5, only 5, right? They don't say this is machine hours, right? So they don't say direct labor hours from production department. It's a mistake in the question. If they give like or else you can add like another part. Can you add 5 hours of machining and say 3 hours of direct labor? Can you add one place? 5 hours of machining and 3 hours of direct labor? Can you add? Then it will be comprehensive. 5 hours of machining and 3 hours of direct labor. From the production department, right? So 3 hours, based on the 8. So 3 hours. And from the painting department, it was 5 hours that is given. So here 750, here 1250. And then you can take the prime cost. Prime cost 2000, 8000, 9200. That is prime cost or total direct cost. I made it 3 hours lamaya. This was not given. So I made it as if I tell it once again, here I added 3 hours of direct labor, 3 hours of direct labor, right? 5 hours of machining and 3 hours of direct labor from production department. So based on that, I took 3 hours. Here 5 hours are given. Okay. And then manufacturing overheads. Manufacturing overheads. Again, we have 2 departments, production and painting. We know the overhead absorption rates. Production 400 per. Shall I? Okay. 400 per machine hour. So they are giving us 5 machine hours. 400 into 5. That's 2000. And here absorption rate is 700 per direct labor hour. 700 per direct labor hour. So direct labor hours of the painting department is 5 hours. See, 5 hours. Sorry. 5 hours. So 3500. So total cost per unit is 9200, 2000, 3500. It's 14,700. You might not see the answer properly. Which is more clear? Just tell me if this is the first screen lamai. If this is the second screen, which is more clear? First or second? First one. Okay. Okay, I'll switch it. So is correct way to get the total comprehensive income in MCQ is making income statement sometimes getting answer or How to remember the ratios have to multiply by 100. If you write answers in thousands, that is okay. That's what I understood from your question. Now, if it is in thousands, say, if it is in thousands, it's like 0.4, here 0.7, that is perfectly okay. Give me 1 second. All right. And what next? How to get 750? 750, actually, that's what I told you. I included another information, 3 hours of direct labor. 3 hours of direct labor. 3 hours of direct labor, right? I added it. It was incomplete in the question. So 3 hours of direct labor, 5 hours of machining, and 3 hours of direct labor. That's what I told you. 250 per labor hour, that into 3. So answer is 14,400. So 14,700. So this is a very good question, right? So second part is very good one. Right. So we have done the 2 questions, 2 compulsory questions. One from the company accounting, the other one is the management accounting, right? Right. Let's get into the next part where I included a cash flow statement. And I'm going to do this under direct method. Leisurely, you can do it under indirect method, right? Right. So I'm going to do this under direct method. And as I told you earlier, you have to do it under indirect method, right? So question is this. The second tutorial, you might have got it, but I'm sharing my one. Right. Don't you have this tutorial? Didn't you get this from the organizing team? Got it. Then can you send it to the chat box? Chat box. Can anyone send it to the chat? So I'll start the question. Meanwhile, one can share it to the chat, right? So let's have the format for the cash flow statement. Question 3. The company name is James PLC. Statement of cash flows. For the year ended 31st March 25. So I told you that I am using the direct method. So operate from customers. And then payments to suppliers. And keep some more space. And then we get cash generated to use from operations. And from that deduct tax paid and interest paid. Then we get net cash generated or used from operating activities. Then we need investment cash flow. Keep some space. The answer is net cash generated or used from investment activities. And then finance cash flow. Result is net cash generated or used from financing activity. And then net cash and cash equivalent change in cash and cash equivalents. Let me take change during the period, during the year. And then cash and cash equivalents balance as at 1st April 24. And then cash and cash equivalent balance as at 31st March 25. Sorry. Okay. So tute has been shared to the chat. Those who don't have it can get it from the drive. Okay, let's start. Financial statements of James PLC for the year ended 31st March 2025 are as follows. Statement of profit or loss and other comprehensive income for the year ending 31st March 2025. Sales, cost of sales, gross profit, other income, distribution cost, administrative expenses, other expenses, finance cost, profit before tax. Statement of financial position 25-24, PPE, inventory, trade receivables, treasury bills 3 months, cash. Equity stated capital, retained earnings, revaluation surplus. Bank loans, trade payables, accrued interest, accrued tax, accrued rent, bank overdraft. So during the year, a machine costing 2,000 was sold for 1,100. The carrying value of this machine at the date of sale was 1,150. Right? So we will take the cash flows. I told you this question is very simple if you answer using the indirect method. But I have taken the direct method. It is bit difficult compared to the indirect method. Right? But I have selected the difficult one to teach something. Right? This one is very simple if you do it using indirect method. Right? That's why I told you as a homework, you do this in indirect method. Right? So the first adjustment, we have sold the machine at 1,100, right? So it's an investment cash flow, sale of machine. Sale of machine. Write as an investment cash flow 1100. Right? 1100. And if you prepare a disposal account lamai, machine disposal account as well as a PPE account, property, plant and equipment, the sales value of the machine was 1100. Here we got cash 1100, cash account debit, disposal account credit, right? And we can write the beginning and ending balances of PPE. Beginning balance 7500 brought forward, ending balance 6620. Okay, beginning and ending balance of PPE. Now we can write the adjustment. The carrying amount of this machine was 1150. Now this is the carrying amount of PPE at the beginning, at the end. Therefore, when we dispose a PPE, the carrying amount should be transferred to the disposal account when the carrying amounts are given. So carrying amount is 1150. 1150. Transfer that to the disposal account. So disposal account debit came from the PPE 1150. Now there is a loss because carrying amount is 1150, but the sales value is 1100. So there is a loss of 50 that goes to P&L. And remember that is included in the other expenses. Okay, other expenses. Right, this is included in the other expenses. Right, and you know that this loss on sale of machine is not a cash flow. Therefore, other expense as per the income statement is 120. So this is not a cash flow, deduct it 50. So the cash payment is 70. Cash payment is 70. Okay. So take it to the operating cash flows. Other expense payment, other expense payment, other expense payment, 70 cash outflow. As I told you, I have selected the difficult method. You could have done this using the indirect method easily, right? But I wanted to teach you something. That's why I took the difficult method. So payment of other expense is 70. Now the first adjustment is done. You can mark it. First adjustment is done. And the second one, during the financial year, I mean the current year, land was revalued for the first time, right? So if you look at the revaluation surplus, you can see from other asset at the beginning 500 balance, but it has been increased to 1500. So we have to assume, and this 1000 increase is because of the land revaluation to the first time. Now this beginning balance may be relating to other asset, right? So it has been increased by 1000. So we have to assume that is relevant to the land revaluation, right? So, sorry. So come to the PPE, revaluation surplus credit, PPE debit. because revaluation, I mean, reserve is an equity account. Equity account is credited, PPE debit. Revaluation reserve. Revaluation reserve. So you can mark the second adjustment as well. Simple. Then depreciation expense for the year 730. So when the carrying amounts are given in PPE, depreciation should be posted to the asset account itself. So depreciation 730. And this is normally included in the administrative expense. So you can prepare an admin expense account. Or you can combine admin and distribution. Because we don't know how much of depreciation is available for admin, how much of depreciation is available for distribution. If they have motor vehicles like asset, right? So you can combine these two, or else, okay, you can keep admin, doesn't matter. Admin. So admin expense as per the income statement is 1,250, right? And in the current liabilities, Lamai, you can see accrued rent, this one, no beginning balance. But there is an ending balance, 145. Now we are going to find the cash flow, right? So it is an accrued balance. You know, rent is an administrative expense. If it is an accrued balance end of the period, carried down from the debit side, 145. 145. And the expense of the admin expense is 1,250. P&L debit, this account credit. P&L debit, it is an expense, 1,250. Okay. And this includes depreciation 730. Depreciation 730. Depreciation is not a cash flow. So I am going to remove it. PPE credit, admin expense debit. Depreciation. Because this 1,250 includes 730 depreciation. Depreciation is not a cash flow. So I removed it. That's why I debited. Then if you balance this account 1,250, you will get the cash payment. Okay. If you balance this account, you will get the cash payment. How can I know whether to use indirect method or direct method? Sorry, other expenses 70, no, isn't it? Because this is a loss. Loss is included in the other expenses. So 120 minus 50, this is not a cash flow. Cash payment is 70. Did I take it correctly? Yes, 70. Correct. Cash payment is 70. Right? And how can I know whether to use direct or indirect? First look at the requirement. Mostly you are given the method to use, direct method or indirect method. If they don't mention the method to use, look at the information. Now, if you are given the income statement or income and expenses separately, you can use either direct method or indirect method. To use the direct method, you should have the income statement. But if you don't have the income statement, you can't use the direct method. You have to use the indirect method. Okay, mostly that is given. I mean, the method to be used is given in the question itself, right? Right, so cash payment is how much? 1,250 minus 730 minus 145, it's 375. 375. So take it into the operating cash flow, admin expenses payment. Admin expenses payment 375 cash outflow. and there is no adjustment relating to the distribution cost, right? So we'll take it as it is. Distribution cost payment $1,050. Actually, you can combine all these payments as operating expenses, right? 70, 375, 1,050. You can combine all three as operating expenses. Okay, that is also a possibility. All right. So you can mark the adjustment number 3 as well. And then you can balance the PPE account. So it seems credit side here 8,500, credit side 1,150, 730 plus 6,620. It's 8,500. It balances, meaning no additions or disposals. No more disposals, no additions. So it balances. Right, it balances. All right. Then we can get into the fourth adjustment. Finance cost consists of interest expense. So Lamai, you can find the interest payment, prepare an account, accrued interest. Accrued interest. So write the beginning and ending balances. It's a liability account. The beginning balance of accrued interest, it's given in the current liability. I think that I should not show the numbers. I'll tell. Accrued interest at the beginning 70. Accrued interest at the end 130. So they say finance cost consists of the interest expense. So from the income statement, finance cost is 330. P&L debit, accrued interest credit 330. Then credit side 400 minus 130, we can find the cash payment. It's 270. Take it to the operating cash flow. Okay. So you can mark the fourth adjustment as well. So interest payment is 270. Interest payment 270. Then fifth adjustment, during the current year, dividend of 200 has been paid. Very simple. It's a finance cash flow, dividend paid. 200 cash outflow. Dividend paid 200 cash outflow. Okay. Then last adjustment, other income is completely consistent with the investment income. Investment income. So other income 650, it's an investment income. So it is an investment cash flow. Investment income 650. So it is a cash inflow. That's it. Now the next difficult adjustment is we have to find the tax payment, right? So it is bit difficult tax payment. First of all, you have to find the profit for the period. How do you find the profit for the period? Even yesterday I told you, you can take the change in the retained earnings. Okay, change in the retained earnings, that is profit for the period, and profit before tax is given. The difference between profit for the period and profit before tax is the tax expense, right? So let's calculate it. So write the retained earnings. Now we are going to find the tax expense, right? Retained earnings. Brought forward balance of retained earnings is retained earnings brought forward balance 1,500. Ending balance of retained earnings 4,300. And we want to find the profit, right? And we saw dividend payment 200. We deduct that from the retained earnings, and no other uses of retained earnings like bonus share issue and so on and so forth. So you can find the profit for the period. Profit for the period means profit after tax. So if you go backward, deducted 200 can be added to the 4,300, and added 1,500 can be deducted. Then you get profit for the period 3,000. Now this is what? Profit after tax. And this is taken by deducting tax expense, which is unknown, from the profit before tax. Profit before tax is known. Profit before tax is 3,800. So difference is tax expense. Understood? Okay. So based on the tax expense, we can prepare an accrued or tax payable account. Accrued tax account, write the beginning and ending balance. Tax payable at the beginning or accrued tax at the beginning 110. Brought forward 110. Carried down 85. So we found the tax expense as 800. P&L debit, accrued tax credit. Therefore, credit side total is 910. 910 minus 85, we can get the cash payment for tax, right? 910 minus 85, I get 825, the tax payment. Take it to the operating cash flow. All right. Okay, other slide, this one. Right. We were in this slide. So Lamai, all the adjustments are done. Now we are using the direct method. I told you this is a bit difficult compared to the indirect method, but I use this to teach something, right? So we can take the first item in the income statement, sales. So we have to find the receipt from customers. So unless otherwise said, we have to assume total sales are on credit. Unless differently given in the question, we have to assume total sales are on credit basis. So let's prepare a debtors control account. Debtors control account and write the beginning and ending balance. Did I take tax payment? 825 should be taken here. Tax paid 825. Right, tax paid 825. The beginning and ending balance of trade receivables or debtors control 1100 beginning balance and ending balance 1340, right? And total sales, we have to assume they are on credit basis 10,200. Sales account credit, this account debit 10,200, correct? Then we can balance this and find the cash receipt from debtors. It's 11,300. 11,300 minus 1,340, I get 9,960. 9,960. Right? You take this into the operating cash flow, receipt from customers. Receipt from customers. And similarly, you prepare a creditors control account. Creditors control account. Beginning balance and ending balance. The beginning balance of trade payables 1,725. Ending balance of trade payables 1,400. And if we know the purchases, I mean the credit purchases, we can find the cash payment to suppliers. But we can't find two things simultaneously. Got it? So first of all, we have to find the purchases. All right. So how do we find the purchase? And unless otherwise given, assume all purchases are on credit. So you know the cost of sales, as well as you know the breakup of the or composition of the cost of sales. Beginning is stock, which is known, plus purchases minus ending is stock, we get cost of goods sold. And we know this one, we know this one, we know this one, so we can find this. All right. So substitute. Beginning stock is 800. Ending stock is 900 minus cost of goods sold 4,300. And if you go backward, deducted item should be added back, added item should be deducted. So 4,300 plus 900 minus 800. So in net, you have to add 100, isn't it? It's 4,400. Correct? Now we know the purchases. We assume this is on credit basis. So creditors control account credit 4,400. Now we can find the cash payment. The credit side total is 25,160. 6,125. Minus 1,400, we get 4,725 cash payment to suppliers. Take it to the operating cash flow. Got it? Right? So we'll take these two cash flows into the operating cash flow. Receipt from customers, it should be 9,960 cash inflow. Payments to suppliers, 4,725 cash outflow. Okay. So we can take one by one, Lamai. If I show it, sales we have taken, cost of sales we have taken, other income we have taken, distribution cost taken, administrative expenses taken, other expenses taken, finance cost taken, right? And profit before tax was taken to find the tax expense, right? And in the statement of financial position, PPE taken, inventory taken, trade receivables taken, treasury bills 3 months. Now remember, this is a cash equivalent, right? Treasury bills 3 months is a cash equivalent, which is a, what is a cash equivalent? Short-term, highly liquid asset. Short-term, highly liquid asset, right? And if you look at the 2023 or 4 paper, in the company accounting question, this was tested. 3 months treasury bills. And also we have cash balance, right? So maybe cash in hand, as well as we have bank overdraft. See, consider all these when you calculate the cash and cash equivalents at the beginning and end, right? So how do we take beginning cash and cash equivalent? 800 plus 125 minus 220. Why? This is an OD. Ending cash and cash equivalents 1,190 minus 890. Shall we take? Okay, beginning cash and cash equivalent. I'll write it here. Treasury bills 800 plus cash in hand 125 minus OD 220. If you have an OD, deduct it. So balance is 800 plus 125 minus 220. It's 705. And remember, treasury bill is a cash equivalent. Okay. Similarly, you can take the ending balance. Treasury bills 1,000 plus cash in hand 190 minus bank overdraft 890. 1,190 minus 890, it is 300. And this can be minus even, right? If the OD balance is higher than the favorable balances, the balance would be a minus figure, negative figure. That can happen. Right. And then what else? Stated capital, you can see it has been reduced. It has been reduced, right? So meaning we have repurchased the shares, or we have settled the shares, right? Repurchase of, or we call it as redemption of shares. You might have learned in business studies, redemption of shares. 1,200 difference, right? 1,200. So it's a finance cash flow, share redemption, meaning you repurchase the shares. Share capital has been reduced. So when you repurchase the share, you have to pay cash. When you issue shares, you get cash. When you redeem shares, you have to pay cash. So cash outflow. When you redeem shares, right? And then we have taken the retained earnings to find the profit for the period. Revaluation surplus was taken, bank loans, right? You can see bank loans, beginning balance is 4,000, ending balance 600. Meaning we have settled bank loans by how much? 3,400. So it's a finance cash flow, bank loan payment. Bank loan payment. How much? 3,400, isn't it? 3,400 minus cash outflow. Okay. And then we have taken trade payables to find the payments to suppliers. Accrued interest was taken, accrued tax was taken, accrued rent was taken, bank overdraft was taken. That's it. Now you can balance. Right? So if I take the operating cash generated or used from operations, 9,960 minus 4,725 minus 70 minus 375 minus 1,050. I get 3,740. Remember, if it is a positive figure, the word should be generated. Generated. You get 1 mark for this, for the received answer. Even though the answer is incorrect, if you write the wordings correctly, you get 1 mark, right? So better to write the wordings correctly. Actually, in previous last couple of years, we did not care about the word use here, generated the use, but I can remember in some years it was tested, right? But better if you write in the proper way, then you don't lose marks. Because this is positive figure, the word is generated. So deduct tax payment and interest payment, 825 and 270. It's 1,095 minus. Then we get net cash flow again generated, isn't it? Because positive cash flow generated 3,740 minus 1,095. It's 2,645. Net cash generated from operations, operating activities. Right? So investment cash flow, obviously, 1,750 cash inflow, net cash flow generated from investment activities. And then finance, all are negative cash flows, 4,600, 4,800 negative. The word used should be used, right? Net cash used from or used in financing activities. And remember, you get 1 mark for each net cash flow for the received answer normally. Then you can take the summation of net cash flows. Net cash flows from operations 2,645. Net cash flows from investment 1,750. Net cash flows from financing minus 4,800. I get 405 negative cash flow for the change. Right? Change in cash flow. Change in cash and cash equivalents during the year. Then if you add the beginning balance 705, exactly you get the ending balance. you get normally 20 marks. Right, 20 marks. And this is very simple if you adapt the indirect method. You know that if you adapt the indirect method, only the operating cash flow is, the way of calculating operating cash flow is different, but ultimate answer is similar. That's your homework, right? And if you do this question, everything will be covered except the leasing transaction. I did not include a leasing transaction here. Yesterday I taught the leasing transaction. If you have a leasing transaction in the cash flow statement, remember initial payment is a investment cash flow outflow. If you have a red color pen, you may write it, right? Initial payment. Initial payment cash outflow, right? If you have an initial direct cost like legal fees, documentation fees, again investment cash outflow. Initial direct cost. Right? Interest payment will come here. Interest payment, lease interest, including lease. Including lease interest. Including lease interest. Right? The capital component is a finance cash flow. Installment paid. Installment paid less interest, because installment consists of interest and capital both, interest and loan component, right? So from the installment paid, what you debit to the lease liability account, installment, lease payment minus interest payment, you get the capital component. So it is a cash outflow. So except this one, I have included all the adjustments here. Okay. Right, Lamai. So actually, I am going to end the seminar from this point, because you have I did not give a break to you. I had a straight run. So what you can do is you have the required knowledge and you have the teachers' assistants, the other sirs and madams' assistants. So with that and with your knowledge, you do the indirect method for this one, right? And then part B is ratio analysis. You know the ratios. There are 15 ratios in the syllabus. And I hope that you can remember each ratio. If not, just look at the theory note and then do this, right? And question 4, I included only one part from the non-for-profit organization. Do it as well. It's a simple exercise, right? So I leave these questions as homeworks because you have the required knowledge now and you have the assistance from the guiders. So as I did not give a break, so I'll stop at this point. And remember, you have to do all 5 questions in second paper. And remember, you have to manage your time, right? If you are a clever student in terms of knowledge, but if you don't manage your time, you can't get a good pass mark, right? Therefore, please manage your time. And my advice is do past papers. For example, if you learn the cash flow statement, do cash flow statement for 10 years, right? Now, earlier we learned overhead costing, do overhead costing for 10 years. And then we learned storages for 10 years. Then salary sheets, normally it doesn't come every year, but do it for 10 years. Likewise, you take one topic and do it for 10 years, right? And if you have any doubt, look at the theory note. And if you have a theory, you can understand it. And by doing lot of questions, you can't get the theory. And assume that you do 500 papers, right? 500 papers are different. Each paper is different. But if you know the theory, 5 papers would be enough, or 10 papers would be enough, right? So if you do more papers, that doesn't mean that you get the required knowledge. But if you know the knowledge or the theory part, if you do sufficient papers, you get the theory plus practice. That's the way. Okay, so I hope that you got something out of these 2 sessions. You know that during couple of hours, I can't do a miracle, right? But assume if you plan, if you have the correct theory knowledge, you can achieve a good grade. And this is like a game, as I told you earlier. So if you happen to be a part of our university, so I'll be at the accounting department. So you can meet me and tell me that I was in that seminar, right? As well as don't waste your time after A-levels, start a professional study like ACCA. It's really worthwhile. It's as mentioned in the previous speeches, it's a passport, actually global passport. So do it, right? So don't waste your time. You will have the formal learning for another couple of years. But after that, yes, we learn until we die, but formal learning ends after 2-3 years, right? Therefore, don't waste your time, right? So you have the required knowledge, basic knowledge in accounting and the other fields, and you continue it after the A-levels. Right, so I wish you all the best for the upcoming examination. I think that I did a small part here. I gave you the small guidance. So wish you all the best for the upcoming examination. Right. So thank you very much and good night, everyone.